I welcome for today's evening program. Before the start the technical sessions, may I request the Chairman of SARC, Sri Adsumalli Venkateshwara, come on to the dais. And may I also request first speaker, CA Gopalakrishna Raju. Thank you, sir. For the start, may I request the Chairman of SRC to address the members less than 2 minutes. Please, sir.
My colleagues in the Regional Council, Vice Chairman Sri Joman, Secretary Sri Chinamastan, Regional Council members Mr. Gopalakrishna Raju, today's Speaker, and Regional Council colleague Srimati Hemavati, Sri Jalapati, senior members, ladies and gentlemen, good evening all of you. I welcome to this 3-hour session. See, in fact, we have given in the newsletter that striking of companies and LLP, but Speaker felt that we need to give more subjects, and that's why now we are taking with registered value and approach of valuation examination, dealt with Mr. Gopalakrishna Raju. Again, closure and liquidation of companies, striking of companies and LLP by CS Dhanapal. So he will be joining later. I welcome all to this evening session. With this, I conclude. Thank you very much.
Only 1 minute. Thank you, sir. Now I request the speaker of this evening seminar, CA Gopalakrishna Raju, to take this session. I think it need not be any profile introduced. He is the very local famous person for the CA members. Sir, next for 45 minutes, 1 hour, yours dais, please.
Thank you.
Chairman of Southern India Regional Council, C. Adsumalli Venkateshwara, Vice Chairman of SARC, C. A. Joman Kejaj, Secretary to the Regional Council, C. A. Chinamastan Talakaila. Actually, it's almost full attendance today we have of the Executive Committee, and my very good council friend, we have my Chennai friend C.A. Hemavati Ramachandran, and most student-friendly regional council member C.A. K. Jalapati, Kovai Jalapati, and very esteemed members, senior members of the profession, friends. It's indeed a privilege for me today to stand before you as a session speaker on one of the most important and emerging topic. It's a newborn baby now. It was expected to be delivered in 2014 itself. Section 247. It's a single chapter section which was not notified at all. Part by part, the Companies Act 2013 was notified, and may I also recognize the presence of charming and young Regional Council member, ever smiling, CA Abhishek Murli. He is the chairman of the Direct Tax Committee, doing a wonderful service to the profession. Thank you, Abhishek, for joining this evening. This particular chapter and section was not touched at all, while the Companies Act 2013 was face by face notified. Even the section 147 was not notified, because that is with respect to the reopening and reopening of the books of accounts, and also with respect to change in the financial statements. We call it as revision in financial statements. Even though the chapter pertaining to accounts and audit was notified fully, only 3 sections were not notified, and chapter number 17 was not notified. That is with respect to registered valuers. And across the Companies Act, this term registered valuers is mentioned in very many places. For example, when we have to issue a further issue of capital, what we call it as a rights issue, the pricing of the rights issue, price has to be valued by the registered valuer. Like that, in so many places, the word registered valuer is there. And until this particular chapter was notified, the erstwhile Companies Act process and procedures were allowed to continue. Meaning, either the merchant banker or a chartered accountant will certify. So this process continued till recently. When I say recently, it is 18th of October 2017. That was the day the registered valuers rules was notified. And 6 months before, if you Google the registered valuers rules, you may come across 2 versions. Version 1, it's actually a February-March 2017 version, which was still fine-tuned, and 18th October 2017 is the final version. I will be discussing the major aspects, and you may also would have witnessed, of course, with a lot of ripples in the professionals, among the professionals, that valuation of shares, which was erstwhile, can be certified by a merchant banker as well as a chartered accountant. A recent notification, they have withdrawn the chartered accountant word is missing there. So it means only merchant banker can do it. And there are a lot of debates that was going on whether merchant bankers will be to that what extent will be qualified and all, which are all let us not go into that part of it. But there is a sea change with respect to profession, with respect to valuation is happening. And the sea change will see in what form? By enabling the existing professionals, meaning the chartered accountants, cost accountants, company secretaries, and also a list of other professionals with a minimum qualification and experience. They will also be encouraged to be part of this a newborn profession called registered valuers. Good. You have to go back and maybe if time permits, kindly Google a term called valuations bill. Valuations bill. Even now you can Google it, you can find out it is there. If I am right, it was issued exactly 10-11 years back. Valuations bill 2007. Then one of the chief ministers of state came forward and offered to the Ministry of HRD 100 plus acres to set up a university called Valuations University. All these were in the discussions. Meaning immediately after plus 2, there will be a UG course on valuation, PG course on valuation, and advanced course on valuation. And all this discussion were kept aside after some time. And understanding the need of registered valuers in the Companies Act 2013, ICAI started a certificate course on valuation, which dated back exactly 2 years later after 2007, when that didn't took off. So 2009, 10, 11, 12, even today if you go to the Valuation Standards Board, the last results that was declared for certificate course on valuation held in Gwalior was in 2012. And quite a good number of our members, they qualified the certificate course also, which is in one side a knowledge updation, with a forethought that in case the government immediately requires a set of professionals, ICA can come forward and declare, yes, here we have a set of professionals who are enabled, who are qualified to be called as a registered valuer, who can be taken as the initial members. All of you know that when our institute was formed in way back in 1959, initial members, they used to be called registered accountants. They became the initial members, and they were given the fellowship of chartered accountancy. All this happened. But today, it is not the scenario. Government came very clearly with respect to this particular profession. And after notifying this particular section 247, single section, single chapter, single section, you don't have, but of course 4 subsections, they came out with a rule on registered valuers and valuation. One of the aspect of the rules is the valuer must adopt best practices in valuation, as known as valuation standards. And this is considered as one of the best opportunity. ICAI came forward with an exposure of valuation standards, and after due deliberations, last week it was notified. I think a couple of days only it was notified as Indian valuation standards. 8 standards were notified. IVS 101, 102, 103, 201, 202, 301, 302 and 303. 8 standards. Well, so this is the present scenario under which we are entering this subject. Post some 15 to 20 minutes later, I will go to the most important area called how do we approach this exam called valuations exam. Today, every one of us inside this auditorium as a member of ICAI can take up this exam. They have given a pre-qualification to write this examination. It's not writing, it's actually ticking, because it's an online exam. There is a pre-qualification. They say even a graduate with 5 years experience, a graduate with 5 years experience, a postgraduate with 3 years experience is eligible to appear for this valuation exam. And a chartered accountant, graduate plus chartered accountancy post qualification 3 years experience, graduate plus cost accounting post qualified cost accounting with 3 years experience, graduation plus company secretary post qualification with 3 years experience are also eligible to write this valuation exam. Good. And you know why they have brought this one particular homogeneous category of professionals? there was no regulation with respect to valuation in the past. Let us make it very clear to start with. No regulation. And there are reports, our own professional fraternities, they have left and right given valuations for plant and machinery, valuations for land and building, which was accepted in some forum, but which actually raised the eyebrows of some forum. How can this professional or that profession? It was not only in our profession, it was also the other side professional. Even chartered engineers, they were giving left and right valuation certificate. Valuation, you tell me which asset should be valued. So even share valuation was certified by chartered engineers that side. So when a question came, can such people can do it, there was no reference anywhere. So and so has to do a valuation of land and building, valuation of plant and machinery, valuation of financial assets. It was not there. It was only understood by convention, by practice, by tradition, and years of follow-up of all these practices. Oh, all these years, this category of professionals only were giving this certificate, so let us continue with this. And today we have come to a scenario where we have adopted the best practices of the globe. And India is going to start, and it's now a newborn baby, and this particular profession is going to grow like anything. And today what you are seeing is it has only germinated like a small plant. And the profession is going to grow very big. And there will be exclusive class of valuers. A valuer cannot value all kinds of assets. So that's why that exclusivity is started now itself with 3 categories today. Not necessary that this will be the only 3 categories. In the years to come, the categories may be added. Now to start with, let's very quickly complete this 247, because wherever we discuss about this, we need to come back to this 247. 247, first subsection. It speaks about whenever there is a valuation is required to be made in respect of any property, stocks, shares, debentures, securities, or goodwill, or any other assets, or net worth of a company, or its liability under the provisions of this Act, it shall be valued, not may. It must be valued by a person having such qualification and experience and registered as a valuer. Please look at this, all these 3. Qualification and experience. That's why I started with the word degree, UG with 5 years experience, PG with 3 years experience, degree with CA with post-qualification 3 years experience, degree with CS with post-qualification 3 years experience, degree with CMA with post-qualification 3 years experience, and registered as a valuer. Where we should register, there is a regulator, and that regulator is IBBI, Insolvency Bankruptcy Board of India. Today the regulator is Insolvency Bankruptcy Board of India. Unless and otherwise, this qualification, experience, and passing the examination, all the 3 happens, then the application will be forwarded not directly by the proposed valuer, so-called proposed valuer. He has to forward that application through an intermediary, and that intermediary is also recognized by the regulator. And that regulator and that intermediary who is recognized by that regulator is RVO. So we have RVs who will be individuals, and you have RVOs who is a tier 2. So tier 1, 2, 3. The top tier is the regulator, IBBI. Tier 2 is the RVO, Registered Valuers Organization, RVO. and the tier 3 are the registered valuers. And if you go into the rules, they mention an individual can also be a registered valuer, a firm can also be a registered valuer, partnership firm can also be a registered valuer. Partnership firm means LLP and also a company. So an LLP, company, so a corporate form of RV is also possible, individual RV is also possible. So tier 1. Tier 2, they will be coming under an umbrella, first umbrella called Registered Valuers Organization. And today, the first link, if at all I have to become a RV, the first link is I have to get myself enrolled as a primary member. I repeat the word, primary member with an RVO. Good. Now, subsection 2. The appointed valuer must, these are all generic points. So he must be impartial, fair, due diligence, he must exercise, make the valuation in accordance with the rules, that is specified rules. I am coming for the rules, very important points alone I will discuss. Please look at that negative point alone. He should not undertake valuation of any assets. This is where the indirect or direct interest in an entity must not be there. Please look at this word. That blue color is after the Companies Amendment Act 2017. So before this it was only a very smaller line. So this blue color is after amendment of 2017. So should not undertake valuation of any assets in which he has a direct or indirect interest or becomes so interested at any time. Please watch this time. During a period of 3 years prior to his appointment as valuer or 3 years after the valuation of assets was conducted by him. Wow. Very, so that is a 6-year period. So before the valuation 3 years and post valuation 3 years, no association should be there. So post valuation, yes, I know what will be the situation of the company. Let me buy and sell the shares. So I should not have been associated with that company either as a statutory auditor or as a consultant. 3 years. So direct or indirect interest. 15-20 minutes we can discuss about this one term called direct or indirect interest. So much depth meaning is there. Third point. If a valuer contravenes, a very important point actually. So everything is encapsulated in one section itself. If a valuer contravenes the provisions of this section or the rules, he shall be punishable with fine which shall not be less than 25,000. It can be extended to 1 lakh. If it is up to this, it's fine. But look at the proviso. Provided that if the valuer has contravened such provisions with the intention to defraud the company, good, or its members, he shall be punishable with imprisonment for a term which may extend to 1 year and with fine which shall not be less than 1 lakh rupees but which shall extend to 5 lakh rupees. So free boarding and lodging. Friends, that is why this profession, quoting of fees for a valuer, by a valuer, henceforth the concept of indemnity insurance, professional indemnity insurance will take a very big leap in our country. And whenever there is a need for a quotation, okay, let me also take an insurance. Of course, the insurance can be only for the fee. One interesting point here is fourth subsection. If you look at this, it will be very interesting. Where a valuer has been convicted, he shall be liable to refund the remuneration and pay for damages to the company or to any other person for loss arising out of incorrect or misleading statements. That's why this is an independent profession. And that's why you have an independent regulator today. You have an independent regulator. Whether ICAI has anything to link with this ICSI or ICMAI, no. They have formed a separate Section 8 company. It's called RVO ICAI, Registered Valuer Organization of ICAI, Registered Valuer Organization of ICMAI, Registered Valuer Organization of ICSI. Of all the three, only 2 websites are currently functional. RVO ICSI website is under construction. So this is in short about the RV. Much more clarity we'll get only when we go into the rules part of it. And I'll be focusing more on the valuation examination part. Presently, if you have to start with, we need to understand this asset class. It starts with Rule 2C. It says a distinct group of assets. Presently, there are 3 groups of assets they have identified. Land and building is one group. Plant and machinery is second group. Third is the securities or financial assets. These are the 3 groups that has been identified. And for a land and building, there is a prerequisite indicative qualification and experience given in Annexure 4 of the rules. It's only indicative. The rule itself says indicative. So it starts with the saying that it should be a B of civil, and along with how many years of experience, all starts for land and building. Plant and machinery also same thing starts with. Now there is one more category where we all come. So definitely a chartered accountant will not fit into valuation of land and building, valuation of plant and machinery and equipment. He doesn't fit into because the qualification doesn't fit there. So let us go into the respective part of it. Please look at that green color. Separate set of valuers for valuation. So such as land and building, plant and machinery and equipment displaying similar characteristics that can be classified and requires separate set of valuers for valuation. Wow. So meaning Gopal Krishna Raju, if he is a registered valuer for securities or financial asset, I can never be a valuer for land and building. I can never be a valuer for plant and machinery. Maybe rare case. I understand there are rarely engineering come chartered accountancy I have come across, but I have come across one gentleman who is a doctor and a chartered accountant. Who is a doctor and a chartered, Dr. Rangarajan. So that Sundaram hospital we have in Anna Nagar. So the founder, I am told he is a chartered accountant and a medical professional, and he practiced medical professional. So rarely we come across twin or 2 sides, north and south pole professional qualified. So it's very, very rare. Maybe if you ask a question, can one person do more than one valuation if he satisfies the educational qualification and he writes the examination. For your information, examination is also separate. So there is a separate examination for securities or financial assets, separate examination for land and building. So maybe if I am preparing for securities and financial assets, if I get the views or suggestions from person who is preparing for L&B or for P&M, it may not suit me, because the kind of books he will be studying, the kind of preparation, the syllabus itself is different. My syllabus are different. So I'll just show you even the syllabus content part of it. It's quite varied. Unlike insolvency professional, the syllabus for insolvency professional is same. Whether it is A, B or C, everybody have to go through the same syllabus. But here it is not so. So that's why it's a beginning today. And unlike insolvency professional, the IBBA has the right to update the syllabus once in 6 months. But here, the law has given the authority to the regulator to update the syllabus once in 3 months. So every quarter, the syllabus will update. And already they have brought out the syllabus in 1st of April. So it's already June is about to be over. Maybe before 30 days they have to announce the new syllabus. Now, coming to the next part of it. There is a difference between certificate of recognition and certificate of registration. We will use the word registration only for registered valuers, but we will use the word recognition for RVO. RVO will get recognition from IBBI, but RVs will get registration from IBBI. So let me repeat this. Registration is only for the RVs. Recognition is for RVOs. Presently, these are all the RVOs. There are 6 RVOs presently are given recognition, and under pipeline I am told another 4 RVOs are there, and in the days to come possibility is that these RVOs will get consolidated also. Let me share with you something quite interesting. There are RVOs like this, the Indian Institution of Valuers. I will come to our Institute of Chartered Accountants RVO, ICMA RVO a little later. Because these two are Section 8 companies. ICA RVO, ICMA RVO has been recently been formed. But the Indian Institution of Valuers were formed to my knowledge, almost 30 years or 40 years back. And it's a society. I repeat, it's a society. So even a trust, a society, a not-for-profit entity which has been formed for quite some time voluntarily. These are not regulated bodies, for your information. These are all self-made bodies who proclaim themselves as a professional body. So, Indian Institution of Valuers is one such body where many amalgam of variety of professionals are there. For your information, engineers are members there, chartered accountants are members there. So if you go there, you get an application, fill it up, pay the admission fee and other fee, you become a member there. Because they give some qualification. If you are qualified with that experience, enough, you can be in. So a chartered accountant can also be a member there, an engineer can also be a member there, and it's a society. And they really do well, because they do a lot of annual programs, like our CP program, they do programs. So they keep the members abreast with the latest development. But they are not a statutory body, and they are not regulated by any government. So they are self-made bodies, self-regulated bodies. And this IIV, Indian Institution of Valuers, are given recognition for your information, and the rule book very clearly says, you will be given maximum up to, this registration is valid up to 31st March 2019. Within that time, you have to convert your society or a trust into a Section 8 company. So meaning from 1st April 2019 onwards, all RVOs will be coming under Companies Act as a Section 8 company. So presently ICMA RVO, ICA RVO, ICSA RVO, they are all recently formed. Institution of Estate Managers and Appraisers is a very old society. IVO Registered Valuers Foundation is also a very old society, and IIV is also a very old society. All these are formed long time back. And if they don't convert themselves into a Section 8 company, the recognition will be derecognized. They will be derecognized. So in short, who can sustain recognition from 1st April 2019 is only a Section 8 company. Good. Now, come to registration. This is only applicable for registered valuers. Partnership entity. Who is a partnership entity? An LLP under LLP Act or a partnership firm registered. So they can also be considered as a registered valuer. But there are conditions. I'll come to that conditions. Please wait. And even a company can also be a registered valuer. It can either be a private limited company or a public limited company. Is it possible? Can a public limited company can be a registered valuer? What do you say? I'll come to that. When I go to the eligibility part of a company or a partnership firm. Good. Now I'm coming for the eligibility. After this eligibility, I'll go into the exam. Who will be eligible to be a registered valuer? A person shall be eligible to be a registered valuer. So these are all the positive points. The first point, he is a valuer member of a RVO. So I have shown that 6 organizations. The first step is, for example, if you have to be a, can I choose, I am a chartered accountant, can I choose to be a valuer member or a primary member? Okay, this word primary member is there in the site, but in the rule, it is called as a valuer member. They use a term called primary member in the site, but that term is, maybe we can ignore it. Valuer member, maybe we can take it. Is a valuer member. Now there is a slight difference between a primary member and a valuer member. A valuer member is a member who is a primary member, who is also qualified, experienced, completed the examination and eligible to be registered, recommended by the RVO. RVO has to recommend, yes, this gentleman has the qualification, has the experience, he has passed the examination, and we are recommending for registration. So RVO has a role, that is, a RVO will charge you an annual fee. Currently every RVO charges 5,000 rupees plus GST as a primary membership fee. I repeat, primary membership fee. So he is a valuer member of a registered valuer organization. Now who is a valuer member? Again we have given an explanation. He is a member of the RVO who possesses the requisite educational qualification experience for being registered as a valuer. For example, if you go to one of these sites, these are some of the sites. Like for example, ICARVO.in, this is one site. Or if you go to RVOICMAI.in, I told you these are the only 2 sites currently being operational. ICSA site is under construction. If you go to any one of this site, you have to fill up your Jatakam, your entire professional Jatakam you have to give. So when did you qualify your degree? Your degree certificate also you have to upload, and you have to upload your final certificate. So you have to upload your experience certificate. Maybe institute every year they will give you that, January month they will give you one big statement that you can upload it. You have to scan it and upload. And they have given a size of the zip file. So these are all something which we need to get ourselves tuned to the technology, put everything in bunch in one file, zip it and then upload it. Is recommended by the RVO, of which he is a valuer member for registration as a valuer. The bylaws of the RVO makes one point very clear. The member who is a primary member enrolled with an RVO will not be entertained based on caste, creed, sex, religion or professional membership. For example, RVO ICAI, there is a postgraduate, an MBA with 23 years of experience. An MBA with 23 years of experience, he wants to become a primary member of RVO ICAI. Can he do so? Yes, he can do so. No, you are not a member of my parent body who has formed this RVO, so we can't entertain you. No. For that means an RVO ICAI is an independent body. RVO ICA is an independent body, has nothing to do with ICAI. ICA is separate, RVO ICA is separate. Presently, RVO ICA doesn't have a land or building or an asset. So presently, ICAI Noida office, Noida place, one particular room has been allocated for the registered office, and the days when the membership grows, number grows, and I am sure there will be a separate office and there will be inauguration of the building and all of us can go there. Has passed the valuation examination, and once you pass the examination, they have given a time limit of 3 years. So within 3 years you become a registered valuer. Else you write the examination again. Enna kodumada. So moral of the story, finish the examination, immediately apply for registration. Very interesting. So we cannot compare the ICA functionalities with the RVO ICI because they come under the rules. It all comes under the rules. And possibility is there if, for example, after registration for 3 years, even one valuation assignment I am not done. Is it possible that my registration will be renewed? All this we have the answers in the rules. Presently it is in the baby stage, so they have not gone to that particular stage. But the days will come. They will keep the members live and alive. So only when the member is alive, meaning in the profession he should be live, then the renewal will be automatic. Today, the insolvency professional, triple IP ICAI, Institute of Insolvency Professional of ICAI, they have made it online. Moment you are appointed as a IP for a particular company, online I have to inform within 3 days. So whatever activities I am doing as an IP, as a liquidator, I must upload with my IPA, Insolvency Professional Agency, online. A couple of days back, triple IP ICAI has made all the communications online. So the days are not far off where any assignment we do, it has to be communicated to the RVO first. He possesses the qualification and experience as specified in Rule 4. There are only 3 points as far as the qualification experience. These are all the negative points which is already there. Not a minor, not declared as unsound mind, not an undischarged, bankrupt. And the positive point is he must be resident in India. And he is not convicted for a term exceeding 6 months, and 5 years have not elapsed. So this is another important point. And most important, please look at the blue color at the end. And if he is convicted for offence and sentenced for 7 years or more, lifetime he can't become a registered valuer. I will bring your kind attention to 271J. I don't know from where this idea germinated for them, but I was very surprised when I saw this as one of the qualification to become an RV. Actually, this is a disqualification if a professional is penalized, if that person is penalized under 271J of the Income Tax Act. So if he is penalized, but please look at this, he is penalized and the time limit for filing appeal before CAT appeals or ITAT or such penalty has been confirmed by ITAT and 5 years have not elapsed. Now what is 271J? This is 271J. Either a chartered accountant or a merchant banker or a registered valuer so far under the Wealth Tax Act. If he has given incorrect information, any report or certificate furnished under any of the provisions of the Income Tax Act, the assessing officer or the CID appeals may direct that such person will be levied with a penalty of 10,000 rupees for each of such report or certificate. So it's a very unique, I have not seen this so far anywhere. So it's only a small 10,000 rupees penalty, but he will be disqualified for 5 years. And is a fit and a proper person. these are all some of the points which is borrowed from the insolvency professional rules of the insolvency professionals. Great. This is subsection, subrule 2. Partnership entity or a company shall be eligible to be registered only if they have in their object that they must render professional or financial services including valuation services. So if this object is not there, they will not be eligible. And is undergoing an insolvency resolution, they are ineligible. Please look at this point. All the partners they should not be disqualified in any of the points mentioned in the individuals, like C, D, E, G, H, I, J, K. So that includes this 271G also. Please look at this point. 3 are all the partners or directors, whichever is lower, they are not registered valuers. This is actually no partnership entity shall be eligible, meaning you have to take it otherwise. So, if for example in a partnership firm, in an LLP, there are only 2 partners, 3 are all the partners. So, which is lower? 2 is lower. All the 2 must be a registered valuer. If there are 5 partners, I repeat, if there are 5 partners, 3 must be registered valuers. So 3 are all the partners or directors, whichever is lower. Maybe if there are 7 partners, 3 again. So there they have not mentioned 50%. Good. None of the partners or directors is a registered valuer for the asset class for the valuation for which it seeks to be a registered valuer. So meaning, if as a partnership firm I am applying for a securities or financial assets registration, then the partners or the directors, they must also be registered valuers under that particular asset class. Or they will be registered under land and building, they will be registered under plant and machinery. Partnership firm will not be given the eligibility to be registered. So it's a very unique condition. Now after this 4, I will go into the examination part of it and leave the floor for my next speaker, Mr. Dhanapal. Good. Qualification and experience. Only 3 lines. Please look at this. An individual shall have the following qualification and experience to be eligible for registration. Postgraduate degree or postgraduate diploma in specified discipline from a university or institute established, recognized, incorporated by law in India. So they have not recognized foreign degrees, for your information. And at least 3 years of experience in that specified discipline post-qualification. So an MBA plus 3 years, MCOM plus 3 years, MBA Finance plus 3 years, MCOM plus 3 years is an eligible qualification experience to become a registered valuer. But they are at par with chartered accountants now, at par with company secretaries, at par with cost and management accountants. Please look at this bachelor's degree or equivalent in the specified discipline from a university or institute established, recognized or incorporated by law in India and have at least 5 years of experience in the specified discipline. This is where the challenge is. Maybe a post-qualification, keeping quiet after the graduation or post-graduation may not be considered as experience in the specified discipline. They have to come out with the respective experience certificate in that specified discipline. This is where the challenge is. Maybe he would have worked as an accountant, he would have worked as some place as a different profile in a BPO, or he would have headed some trading industry or manufacturing industry. So most important is this experience in the specified discipline, because this will be attested and approved, will be approved by the respective RVO. And if RVO doesn't approve it, so he will ask, okay, degree I will take it, but experience in that specified discipline is where that is. But please look here. Membership of a professional institute, established by an Act of Parliament, enacted for the purpose of regulation of a profession with at least 3 years experience after such membership. Over. There is a lot of difference between A, B and C. Please look at B, at least 5 years of experience in the specified discipline. This is where the challenge will be there for the graduates and postgraduates. That is why professionals will not have this challenge. So, degree plus professional qualification plus 3 years experience, enough. Not in the specified discipline is not the question here. So, now coming for the examination. Very interesting part is this examination can be taken as many times. No restriction. Please look at Rule 5, Sub-Rule 5. An individual may appear for the valuation exam any number of times. Each time the exam fee is 1,500 plus GST. Any number of times. Number 1. Now going into slowly let me go into the exam part of it, syllabus part of it. Huh? The authority shall determine the syllabus. IBBI has decided the syllabus. It is there in the website, IBBI website. For your information, this is the syllabus. This is the syllabus. Is it visible? Yes or no? Not visible. I don't know why. Let it be. I'll just there are 100 marks objective questions, but out of this the syllabus content is you will have 4 marks in macroeconomics. Fundamentals of finance will be for 3 marks. There will be professional ethics for 5 marks. That means there will be 5 questions. Financial statement analysis 3 marks. Most important, 18 marks on general laws. And out of this valuation rules which I just discussed will come for 5 marks. Apart from this, Contract Act is there, Sale of Goods Act is there, Transfer of Property Act is there, Indian Stamp Act is there, Income Tax Act is there. There will be 2-3 questions on Income Tax Act. So all of us we can score good marks. Insolvency Bankruptcy Code, 2-3 questions will be there. Few judicial pronouncements on valuations. Hardly some 18 to 20 case laws are there so far on valuation. 1 case law question will come, 1 mark, just 1 question. 1 question. And recently there is one decision on the Insolvency Bankruptcy Code, whether the home buyers will be considered as a operational creditor or a financial creditor. And there was a decision, if at all there is a commitment which is given until the handing over of the asset, handing over of the apartment, the home buyers should be considered until such time as financial creditors, which has also been formed part of the IBC ordinance. And these are some of the judgments. 1 question or 2 questions will come from the judgments on valuation. You will have 5 marks on overview of valuation. Valuation approaches and methods, there will be 5 marks. 33 marks on valuation application. How do we do a equity valuation, business valuation, bond valuation, option valuation, intangible asset valuation, specific business situation valuation. Example, You have a startup entity because you will not have a previous balance sheet at all. Because they will only do the valuation based on the forecast. Cyclical firms valuation. So, all these will form part of the syllabus, which will carry 33 marks. And you have 10 marks laws and regulations relevant to financial asset valuation. Like for example, Ind AS 113 will carry at least 2 marks. 2 questions will be there. Companies Act will carry 5 to 8 marks. SEBI regulations will carry few marks, especially SEBI mutual fund regulation, SEBI delisting regulations, ESOP valuation, RBI and FEMA regulations, few marks. Income tax and other statutes, especially on capital gains, on taxation of partnership and corporate entities, carry forward of losses, compliance of DTA agreements, and most important, 14 marks on case studies. And there will be 2 case studies. One case study will carry 3 marks, 3 sub-questions. Another case study will have 4 sub-questions. So there will be only 7 questions, but 7 into 2, 14 marks. This is where the real mark lies. And of course, if you make a spread of your knowledge on majority of the aspects, and I am sure all these laws are not alien to you. Some or other, some of you would have even been practicing in one or two areas. So you will be very good. The difficult part is not getting the comfort or control in all the areas. 1 or 2 areas will be having the comfort, but not in all areas. That is where we need to prepare for this. My understanding for this particular syllabus is it will take at least a week to 2 weeks of preparation, and every day at least 4 to 5 hours of preparation. So if you take like that, 14 to 15 days into 4 hours per day, 60 hours of your own preparation will be sufficient to clear this examination. This is number 1. Number 2, can I directly appear for this examination? Answer is no. I cannot appear directly for this exam. Even though I have the qualification, I have the experience, I cannot directly appear for this exam. There is a mandatory educational training program I need to complete with the RVO, the Registered Valuers Organization. So for example, if I am going to appear for the LNB examination, so I need to complete mandatory 50 hours of training, and that certificate has to be given by the respective RVO. So meaning first I have to become a primary member by uploading all my credentials. So they will verify my credentials whether you have the qualification and experience. Then only you will be eligible to get yourself enrolled as a primary member, and among the primary members they will conduct this 50-hour training. Institute of Chartered Accountants of India, ICAI RVO, their first batch they have started in Delhi, Noida, that is in that sector 61 itself they have started, and my information what I have got is it's a weekend batch. So it's a Saturday and Sunday batch. They have started this June 1st week only they have started. June 2nd and 3rd they started, and by this end of this month they will be completing it. So it will be an 8-day program. So 4 weeks each day there will be 6 hours or 7 hours maximum. So it will be a 50-hour program, and 48 hours will be the curriculum, maybe 1 or 2 hours they may have a model exams also, and after that they will give a certificate. And only if I have this certificate I can log into the nodal agency. There is a nodal agency who is conducting this examination, approved by Insolvency Bankruptcy Board of India, and that nodal agency is Bombay Stock Exchange, BSE. So BSE across the country they are having this examination, and unless and otherwise you first register with step 1, register as a primary member with RVO. Step 2, you have to complete the 50 hours of training. Step 3, register with BSc. It is zero fee. There is no fee for BSc. You have to register with the BSc. Online you have to register by uploading your photographs, and there will be user ID password they will give. Step 4, if you have to pay 1500 rupee fee for examination, that fee they will receive only when you upload the training certificate. You have to upload the training certificate given by the RVO. So after uploading the training certificate, you pay the fee, you can select the slots available. Anywhere in India you can write. My understanding, Chennai you have a very good examination center they have in Dhanapal. Dhanapal they have the 7th floor or 8th floor, they have their office. The corner, you have the Dhanapal signal. The Dhanapal signal, you have a very tall building there. It's called, it's a Chaitanya building. It's a Chaitanya Builders building, very tall building. There, 8th floor, Bombay Stock Exchange, they are having their office. It's an exclusive education center. There, the examination centers are there. So you will be allotted a slot, and the examination timing is from morning 8:30. You can select a slot from 8:30 to 10:30 till evening 5:30 to 7:30. So every day 4 examinations are there. Insolvency professional, there will be only 2 exams. Morning 1 exam, afternoon 1 exam. But here there are 4 exams. So till noon 2 examinations, post noon 2 examinations. 4 examinations in a day. So that's in short about an approach to valuation exam. Maybe one liner I can give about what is the chance of passing this course. This course is an in-depth course. In-depth. So unless and otherwise I have a grip on, I repeat, I have a grip on the valuations methodologies and valuation methods, arithmetic methods. I repeat, arithmetic methods. Qualifying this examination is will be a difficult task. So those who have a flair for this management accounting, this strategic financial management, option valuation, restructuring, and those who have a hands-on experience on valuation of the firms, business valuation, equity valuation, they will find this more and more challenging and interesting. And that's in short about valuation course. I'll take some few questions.
Whether a person can be both valuer as well as an insolvency professional?
Presently, no such council direction is there. Maybe from a chartered accountant perspective, I will say, if I am a chartered accountant in practice, can I be an insolvency professional and a registered valuer? Here, ICA has to give a council decision. This is number 1. Maybe if I am not a chartered accountant in practice, but I am an insolvency professional as well as a registered valuer, ICA will not come into this place. But the regulator, IBBA, has to come out with a notification or with a direction, a circular. Because today, nowadays, especially from, if I am right, from January onwards, number of circulars are being issued by IBBI exclusively for insolvency professionals. So, as an insolvency professional, when you communicate, you have to communicate to your registered address with your registered email ID. So, to that very minute point and all, they are giving circulars. So, in the days to come, once a good number of RVs are there, they will come out with such circulars also. No, you are a registered valuer, you practice only RV. Either you be an IP or you be an RV. Presently, I don't see any difference. I don't see any distinction.
Couple of questions. One, the 50-hour training program that you said that is being conducted at Delhi, is that an online program as well, or you have to go in person?
It's a you have to attend that course in person. And already one batch is over in ICMAI. ICMA, they conducted the program in all the 4 metros: Delhi, Mumbai, Calcutta, Chennai. So one batch is already over, they have got the certificates. As in CA, ICA, RVO, they are conducting one. And the other 3 I showed you, the estate managers, supervisors, they are conducting training program for LNB and P&M, not for SFA. But they have got the approval for all 3. Even ICAI, RVO, they have got approval for all 3. ICMA, RVO, they have got approval for LNB, P&M, SFA. All 3 they have got approval. But presently the batch is only for SFA.
So in Chennai, which is the next batch?
Chennai, I am coordinating that program in Chennai. Coimbatore branch chairman is coordinating. Most probably in July, we'll have a course in Chennai. We'll have only weekends. 4 weekends we may have. It may start on July 7th. So I'm waiting for the official communication. So what I'm saying is only the discussion that is going on. We have already formed a small group and people have given their confirmation. So I have sent that list. So they are in the process of identifying, because this is a very, very advanced program. So getting the faculty across the country is a big challenge, very big challenge. And maybe being a first time program, they themselves are new to it, the faculty themselves. So they have, maybe they were not exposed to this examination type. So and the participants will be interested to get exam oriented training. So that is the only challenge in identifying. But already few faculties have confirmed. Once all the faculty list is confirmed, an email will be sent.
Second question. The rules generally doesn't talk about members in practice and members in employment.
Very good question. Very good. So there is no distinction. Member with the 3 years experience. So moral of the story, industry members, degree with the membership, post 3 years experience after getting the membership, they are also eligible to write the examination and become an RV. They can. But one thing, once you want to practice as an RV, you cannot be in employment. That is also there. If you want to become a registered valuer, you should not be in employment. Or you get the RV and surrender it. Temporary surrender. You can do it. Whenever you are out of the, you get the membership again, you get the registration again. But within 3 years you have to do it. If 3 years is gone, you have to write exam again.
Experience means practice is
Enough. So that is why I said discipline is only applicable for graduation and post-graduation. Here, if you say, even institute, whatever they give to you, that you are enrolled in 1999, they will say you are in continuous practice till this day. That is enough. But they don't say specified discipline. A chartered accountant in practice is deemed, it is understood, he is practicing that specified discipline. The challenge is only for the graduation, post-graduation, they have to come out with a specific experience certificate, which is a challenge.
So this training program from IP, when it will come to Chennai? Still it is not in Chennai. IP, Insurance Professional Training Program.
Oh, that one. So presently there is a training program they have announced in Bombay or Delhi. Hyderabad also they have announced. Chennai they have not yet announced. There was one program which happened in Institute of Cost Accountants last month for all the freshly qualified IPs. So even CAs with IP, ICMA with IP, they were there. But the invite should come. So they conduct in Chennai also. Sometimes in our institute, sometimes. So because ICA doesn't come under IBBI. Only the triple IP ICA come under IBBI. So they have to communicate, and they will communicate with ICA and find out the venue availability, and then they will fix it, or they will fix it outside. Just that side some question. Huh? Oh, good, very good. I am told Institute of RVO ICMAI. RVO ICMA, they have come out with 4 volumes of material like this. So I have just taken, it's a PDF document, I have just taken a printout of it. RVO ICI, they are giving 3 books which is published by Taxman. So I have the front page of that book. If you wish, I can share it. So one is a financial modeling book on using the spreadsheet packages. So how do you use a spreadsheet to do the option valuation, to do the dividend discount model, Gordon model. So that is one booklet is there. One book in exclusively on business valuation. So there are 3 books which will be given. I am told those are the 3 books that were given in the Delhi program which is currently going on. Yes, only for the participants. Only for the participants. Yes, there is 25,000 plus GST for the training program. Plus, you have to become a primary member, 5,000 plus GST.
Training program is prior to writing examination.
Mandatory. 50-hour certificate irundatha exam eludha mudiyum. BSc will first ask for the certificate.
In terms of, I don't know if you've heard it earlier, market opportunities for this.
Tremendous. Tremendous, I am telling you. See, what I perceive, it is my opinion, please don't quote me. My understanding is they are going to bring lot of amendments in the coming years by adding in Income Tax Act, in FEMA, wherever there is a need for valuation, they'll include it. Land and building. RBI is actually waiting for, currently, land and building valuers list if you ask, to my understanding, one LNB person has qualified just in the month of June. One plant and machinery person has qualified. I got this number and this card. How did you made it? Sir, rumba simple, sir. First time when you write the exam, you will understand what the exam is. And you know what he said? Sir, whenever exam block panniten. So he attempted as many number of times. And I am told that there is a question bank of 3,000 and 3,000 plus, slightly above. So possibility is once you write the examination, it will be there in memory. You cannot carry out anything. Come and again prepare. Again go and write. This is the strategy he told me. Huh? Oh, 13th exam? 30th exam you will clear. Okay, by probability. Okay. So we'll take any last question.
Is there any empanelment for registered value after passing the examination?
Your name will be in the registered valuers list and website in the IBBA. So presently I don't see any name. It is all in the process. Having your name in IBBA website itself is an empanelment currently. And currently the base has to be is under creation. Once it is created, my forethought says you will have recognition in all laws. RVOs may come and go. RVOs maybe today, may not be tomorrow, but RVs will be there. Tier 1, 2, 3. Tier 1 is RV, Tier 2 RVO, Tier 3 is a regulator. Regulator and RV will be there. RVOs, they may either get consolidated. For example, do we need 3 RVOs, ICSI RVO, ICA RVO? There is possibility all 3 may consolidate in future. All 3 institute may not get consolidated, but RVOs may get consolidated. A merger of these NGOs is possible.
Primary membership first and then go for...
Only after primary membership, you are eligible to attend the course. Because it is in the rule itself is there. For the primary member only, the training has to be given. It is part of their regulation that they cannot train. For example, a BE with a civil engineering with 10 years of experience, he want to enroll for securities and financial assets. No. When you go to online, you have to select 3 categories. First, land and building, land and machinery, securities of financial assets. Securities of financial asset, you have to give your PAN card copy, your address proof, your education certificate, your experience certificate. I repeat, your experience certificate mandatory, you have to upload. So as far as the professionals are concerned, your institute letter is enough. That you are in practice for 10 years, 20 years, 30 years, that is enough. As a member, yes. So friends, thank you very much for the patience what you have shown. May I now invite CSS Dhanapal on the stage, please. A very, very challenging topic and most hot topic. A topic like closure of companies, liquidation, and the last station before the train reaches the destination is strike off of name in the registrar of companies. Of course, that process is made quite procedure oriented now. The strike off of name has now been made very procedure oriented by introducing new forms and all. But that's the end step. Today, companies running a company or even maintaining a company is a burden, is a cost. There is a cost involved. Maybe one very important cost is compliance cost. So why should I have a compliance? Why should I have an audit? I have to file returns for income tax, this, that. Because there is no mandatory, there is no exemption for non-filing of return even for income tax. So sometimes the balance sheet will be same. Copy, copy, copy. So if there is no P&L revenue or expenses, same. Balance sheet will look same, but years alone will be different. But is it required? But necessity to file necessity returns and keep it live. Today we have got one more option for a company called, okay, 12 years later I may use this company, not now. 4 years later I may use this company, not now. So you can park this as a dormant company and then make it an active company. So all these possibilities have now emerged. But keeping in mind the various initiatives of the department, ministries' initiatives, especially, they are identifying if the company is non-operational, would it be a shell company? So why they are having this company? Are they routing any transaction? How many bank accounts are there? So all these questions will emerge. So today there is lot of education, awareness among the corporate field, especially the directors, that why should we have this company? There are people who want to convert this into LLP. Let us have it as an LLP. Unless and otherwise it is active, we'll have this as a company. We'll close it. We'll shut it down. We'll wind it up. So all these scenarios are now happening. Gone are the days when people used to keep quiet. After incorporation, they'll keep quiet. After doing some operations, they'll keep quiet without doing any. And in between ROC, the ministry will come out with a scheme. Okay, lump sum 7 years, 8 years, 10 years, 17 years you can file with the concession in fee with 10%, 20% loan you pay and then regularize and streamline. All this is gone now. So today the law itself has a mechanism for coming out clean with respect to compliance as well as with respect to closure of companies. So with this background, we thought that this program will be of immense importance, and I am sure there will be a lot of questions on this. I will also be a participant to put questions before Mr. Dhanapal. Now over to Mr. Dhanapal, but before that a very brief introduction. He is a practicing company secretary with close to 1.5 decades of experience, an author of books on corporate laws, especially his recent book on NCLT and NCLAT. It's the only book which is available in the market across length and breadth of the country, which was recently launched in Express Avenue under the golden hands of Justice Kribakaran. So many such laurels are in his cap, and he is presently holding the position as Secretary of Southern India Regional Council, Institute of Company Secretaries of India. So over to Mr. Dhanapal.
Good evening all. I thank you, friend Gopalakrishna Raju, who has given a brief introduction about me. I think almost we are in the close of evenings and we are going to discuss on the closure of companies now. And now, why this particular topic is today is discussed in various forums, not only here, in many forums. In fact, before coming here, I was sitting with the regional director and registrar of companies. That's why I couldn't join the speech of Mr. G.K. Raju. So where most of the question is posted to regional director and ROC is this only, the strike off only. Why and what is the remedy available to strike off and what can be done, what should not be done, and how it can be closed without filing all that. So I think probably with the still more maturity on a department aspects, how they see it as a strike off. Now I can really handle today the topic practically how it is happening and what is the department perspective on that. Yes. Probably in the morning I could give my views only as a person who can dealing with the subject and practice. But today, after this session, afternoon session, we had in ICSA, that means SARC, ICSA, where the regional director and ROC was attending. So the important questions, in fact, out of 30 questions, 25 questions is only on strike off only. Strike off and revival and filing of balance sheet, what is the recourse available, all that. Probably when during deliberation, wherever touching upon the department aspects, I will tell you what they really feel on that strike off and what is their plan to do to implement the strike off. All that I will share then and there in my deliberation, and probably will take your question also. I can really say what they now feel now, since they express their views today. First, before going into the topic is liquidation of companies and closure of companies, including strike off. I wonder, first we should understand what is that strike off. One, and two is what is winding up and what is liquidation and what is dissolution. Is all is one and the same or all are different? We have to first try to understand the difference between all these three so that we can move on to understand what are this thing, how it makes difference and what are the procedures for that and what the law prescribes for this. The strike off, that probably I have to take it at the end only because more to deliberate on that, more particularly now because I have more than 3 lakh company has got notice today from Ministry of Corporate Affairs for striking of the company. So today it's a burning issue concerning Ministry of Corporate Affairs and corporate. So I have to give some more time for that strike off. Before that I thought I will give a prelude and brief about what is winding up and what is liquidation, what is the current status. See, why I am saying this particular topic, any other topic in Companies Act or insolvency, IBC code can be dealt with because we are practicing a routine thing. But winding up and liquidation and strike off, only when occasion comes we do that. Otherwise we don't, in routine matter, we do appointment of directors, we allot shares and even we file returns and all these things routine we are doing it. But strike off and liquidation and winding up, all that will not happen in a routine way. So that means only when the situation comes, scenario arises, that happens. First, let me take you through what is that strike-off. Then I will go to next concept, then come with the procedures on strike-off. What the procedures being followed. See, strike-off is that removing the name from record of a register of companies. Because I have seen many has understood, strike-off means it's like a winding up of company done by, because many professionals pose that question to me. And many places I am coming across this question. Strike-off, what they feel is, what they understand is winding up of company. It's like a liquidation of company. See, please understand, liquidation of company is different. And winding up is different. Strike-off is different. Closure of company, is it one and the same? Strike-off and closure of company is one and the same. But closure is general context that can be used for all this concept. Strike-off, winding up, dissolution, all that we can say closure of company. Right? Closure of company is a common language that you are using. That's not the legal language actually. But liquidation, winding up and strike-off, all the legal language which is specified under the Provisions of Companies Act and under Provisions of Insolvency and Bankruptcy Code. Strike-off is nothing but Section 248 of the Companies Act 2013. It gives a power. In fact, many of you who are in practice for a long time must be knowing Section 560. Those days any scheme comes and even without scheme itself we used to file a form for under Section 560 of the 1956 Act. Thereafter the department came out with the schemes, fast track scheme, and many schemes kept coming in 2000 and 2001. Then they made it by paying 5,000 rupees you can directly close the company, I mean strike off the company. Those are things that have been followed under the 1956 Act. Now it's a complete change from 1956 Act. Though the provisions are same, but the method and procedure that they are following now is little different than 1956 Act. So somebody who knows already what are the provisions of Section 560 of 1956 Act and what was the procedure being followed by register of companies in those days, you can easily relate to the section and provisions of Section 248 of the Companies Act 2013. Okay, first let me throw a light on what is that strike-off. Strike-off is nothing but when it's like a register of companies, right? We call it as registrar of companies, but what I am saying is register of companies. Register of companies are maintaining register of companies, meaning that before MCA has come with effect from 2006, there was no online record or there is no online data. There was a register maintained by the register of companies. So that's the reason if you see Section 560, removal of name from register of companies. Many understand, professionals and other people, removal of name from registrar of company. It is not registrar of company. It is from register of companies maintained by registrar of companies. Hope you understand now. So like how a sale deed is registered in a sub-register office, how a power of attorney is registered in a sub-register office, they are maintaining a separate book for both. You can't, if you go for inspection to sub-register office for document verification, you are not permitted to see the books maintained for power of attorney. That's a separate book. Book A is maintained for sale deed and book B for, that's what we call it as a register. Same way, earlier a physical register was maintained, now it is by online, by Ministry of Corporate Affairs. Today, the register of companies is nothing but Ministry of Corporate Affairs portal, where all the companies are listed out. About 14 lakhs and odd companies are there. In Chennai itself, about 80,000 companies are registered, Chennai alone. So all these databases are available in Ministry of Corporate Affairs. Now, Section 240, why of 248, what it contemplates? Now, striking of name by registrar of companies. So, striking of name is removing a name from database. That's the striking of companies. This is nothing to do with the winding up or liquidation. What is that winding up? What is that liquidation? What is that dissolution? In fact, if Companies Act 1956 if you have handled any of the winding up matters, probably you can easily correlate with the current provision as well as insolvency, provisions of insolvency and bankruptcy code. If you see the Companies Act 2013, originally Companies Act 1956, there is a three process is followed. What is this three process? Generally under section 433 and 433(4) of the Companies Act 1956, we file application. Who can file an application? A company can file application, a creditor can file application. In fact, BFR can file an application to wind up the company. And the ministry then can file an application where continuously more than 3 years accounts and annual return is not filed. These are the category through which section 433 petition will be filed under 1956 Act. The equivalent provision is section 279 of Companies Act 2013, right? So what is that winding up what we are talking about? It is nothing but earlier itself, I will come back to the strike off again. I want to throw light on first what is strike off, what is winding up, what is regret. Then if I explain, you will understand better the procedures. See, the strike off, as I told you, it is removing a name from register of companies maintained by register of companies. That is strike off. This is nothing to do with the winding up, liquidation. But after strike off, dissolution happens by virtue of, in fact, the power is given to the register of companies, whereby it operates, by operation of law, it automatically happens. A dissolution of company by strike of the name. The reason being, see, when the company is created by registering a document, right, it's a body corporate is created, right? So what is the dissolution what we are talking about? Winding up, liquidation, dissolution, all these terms you would have come across. What is it? When you register a company, a baby is given a birth. So a life is coming in the earth. When it is going away, it is going away. So there is a birth certificate, there is a death certificate. So birth certificate is matching with the death certificate. Means a death certificate will be matched with birth certificate where a person comes in the earth and is out of earth. So this is a simple logic whereby a company registered, there's a registration certificate is given, right? Means a body corporate is created. See, when company is registered, in law it is a person, a body is created, a body corporate is created. That's the reason the law says that a member who is forming a company is different from the body corporate. Fine. By removing a name from the registered, maintained by registrar companies, can the body corporate disappear? It cannot happen. It is only a process being followed by registrar companies to see that their records are updated. After doing that, a process of dissolution should happen, then only there is a birth, there is a death. Dissolution is nothing but death of a company. You can relate dissolution as a death of the company. Fine. What is that winding up what we are talking about? Winding up and liquidation of company, all that we are discussing in the recent period that too. After insolvency bankruptcy code has come, we are discussing almost daily, every day we are discussing on that. What is that winding up? Earlier, when we file application under section 433, under the Companies Act 2013, section 271, when a company is unable to pay debt, means there is a liability where a company is unable to pay more than a lakh to the creditor. Under 1956 Act, we file under section 433. Under 2013 Act, we file under section 271. That's what the position what I am sharing here before bankruptcy code is introduced. After bankruptcy code introduced, the things are completely different. So that's the reason I am explaining every stage. Otherwise, it's very difficult. See, if I explain directly bankruptcy code, then you can't understand, you can't relate with why this development has come, why this law has come, bankruptcy code first of all. So here, dissolution is nothing but killing a company. What is that winding up what we are talking about? When there is a default by the company to make a payment to the creditor more than a lakh, a 3-week notice will be given to the creditor insisting him to pay. I am saying the old position. Whereby if within 3 weeks time, if he is not agreeing to pay, then a petition will be filed with the High Court. That's what the earlier position. Now also position is there, but it is differently it is done today. Now there is no question of petition, High Court and all, now everything comes under the NCLT. Now once I file a petition with the High Court, earlier what happened, the High Court will serve a notice to other side and the other side will come, and if he says that no, yes, I have to pay, but I am not in a position to pay, that means inability to pay the debt. That's the legal status he acquired. So immediately High Court order winding up order. So here alone there is a confusion. There in the corporate world, even in a professional community, the moment winding up order is ordered, there is no company at all. Company is closed. In fact, many is thinking that way. The moment winding up order is passed, casually they say, company has passed, court has passed winding up order to the company, so I need not to do anything to the company. See, winding up order is nothing but, today a RP is appointed. That's the position. Earlier, winding up order, passing and winding up order by High Court. When winding up order is passed, a liquidator is appointed simultaneously when winding up order is passed. Then the process starts. Once the liquidator is appointed to wind up the company. So wind up means he is closing the company. In order to close the company, he has to see what are the assets are in the company. So that's why the liquidator comes into picture. And seeing the asset, seeing the liability, he sells the asset, he gets the claim from the creditor, and he realizes the money, and he pays off the claim to the creditors. And once everything is done, he prepares a detailed report and file with the court. And along with that, he filed a petition for dissolution. So here alone, the killing of company is happening earlier. So the process is, winding up is just to see that realizing the asset, settling the claim by liquidator under the old act as well as 2013 act also. Okay, this is a position under the Companies Act, what I am saying. So once dissolution petition is filed, after settling all the claims, the court hears and sees that all the assets are sold and claims are paid. There is nothing to do that. So court passes order of dissolution. That's the actual stage where company is dead. That's the reason if you see in amalgamation also, when a company is amalgamated, A company is amalgamated B company, even earlier, even now also, a company once amalgamated with the A company, the B company, the A company will be dissolved. But here in amalgamation, one small change is, we need not to file a separate application. The amalgamation order itself constitutes a dissolution order. That's what the provision of the even Companies Act 1956 or 13 Act says. So in every situation, dissolution alone will ensure company disappears. Hope you got the point. So dissolution alone can ensure company disappears. That is one. So dissolution, how it can happen? It can happen one, winding up, two, strike off of companies. This is two. What is that liquidation that we are talking about? Today in the reason, when you open the paper or everywhere in the corporate side, every day we come across the terminology liquidation. What is that liquidation? Is it different from winding up? Is it different from strike off? So liquidation and winding up is one and the same. Actually speaking, earlier the context and terminology of winding up is used under Companies Act. And colloquially we call it as a liquidation earlier, because there was no legal terminology liquidation under the old act. Though colloquially in one or two places also companies have used this, but actually this is winding up only. But in bankruptcy code, if you see the insolvency bankruptcy code, you can't even find single places a word winding up, because the winding up word is completely replaced with the liquidation. So now, coming back to today's position, there are only two situations. One is striking of company from the register of companies maintained by the registrar of companies, and dissolution takes place by operation of law. Means we need not to do anything for strike off. Whereas in case of liquidation, still under IPCA, do you have to file a petition for dissolution? That I will come little later after finishing the Companies Act side. Now I will take you through the strike off. What is the strike off that we are today? The entire corporate and even department are going completely serious about it. Section 248 of the Companies Act 2013. See, before going into that, one thing importantly I wanted to tell you. How many of you are aware of it, I don't know. If you see the Companies Act 1956, almost some 230 sections were dealing on winding up, completely in Companies Act. In fact, that is the reason the Companies Act was running up to 656 sections. Okay. Then after that, if you see Companies Act 2013, they completely reduced all that. That's the reason the number of sections has drastically has come down. Where almost a section about more than 170 sections were there, but unfortunately, they, instead of reducing it, they almost brought 100 sections in the Companies Act 2013. If you see section 270 to section 365, 95 sections is dealing with winding up under Companies Act 2013. Suppose if you have a barrack with you, if it carries section 270 to 365, today all these sections are replaced by provisions of Insolvency Bankruptcy Code. No. No, this cannot be explained in PPT, I think. Over a period of time, with the experience only, this particular topic can be explained. Okay, that's the reason I never try to do PPT, because these are all by experience, because I would handle many cases, winding up, how to do that. Few things are in the law, few things in the practice, and that too now completely practice has changed and law has also changed. And the law expects different practice and practice is different. Okay, so all this practically only one can say. It cannot be explained in a table. You can't understand anything. Nothing can be put in the table. So this is the basic difference whereby a winding up and liquidation and strike off. Strike off, why the provision of strike off is invoked? Section 248. Earlier section 560 of the 1956 Act. Now today section 248 of 2039. 248 section 1 says that register of companies, if the company is not in operation for continuously 1 year, or if the company has not filed its balance sheet annual return for 2 years, they can initiate the process on its own motion, striking of the company. That's how the notice are today sent under section 248 subsection 1, STK 1 form number. So you will be, all of you must be, would have at least got one of your clients, because I got so many of my clients. Okay, so one at least would have got. Seeing that STK 1, asking that similar notice, senior sitting here would have practiced long time, you must have received in 560, under section 560 of the Companies Act 1956, when the accounts are not filed. Same provision. In fact, the provision of 560 is almost equal to, or I have to say that section 248 is almost similar to the provision 560 of the 1956 Act. So invoking subsection 1 of section 248, Register of Companies issues notice to the company asking the reason why the company should not be closed. So this is one way where the Register of Companies are given power when the company has not filed continuously 2 years the balance sheet, or a company has not commenced its operation for 1 year, they have a power under section 248 section 1 to initiate strike off of the process. So they have to issue a notice 1 and give 14 days time, then again they have to give another notice where they have to give 30 days time, then they can proceed further with the strike of the name of the company. This is one aspect. Here, okay, many question comes this only here. I received the notice and company is not operation. And promoters and as it is company says that I started a company and not done anything. And ROC themselves is closing, and they themselves is closing, why I have to worry? So why you are panicking? Let them close it. We will sit at home or we will do our this thing. Okay. ROC will close. Okay. But after closing, they in fact in the notice itself, if you see that, after they are closing in STK1 notice, there can, last line you can see. Even after strike off done by the Register of Companies, there is a line in the STK1 format sent by ROC that the director will be prosecuted for the violations. That last one, like, in fact, we take it very lightly. What is there? That one line, when it happens, we'll see that today everything happens with no time. Suddenly 3 lakhs notices are coming to all the companies. Suddenly 2 lakh directors are, DINs are blocked, and how much ever they are board of the prestigious company and banks also What is the use? Some time back you would have left some small company without filing. His DIN is blocked and he cannot act as a director of prestigious company also. In fact, the company would have failed. The other company which has not filed or done violation, not even maybe operating now, because of that person, the person who's really have a good name in the society, he cannot act as a director in a good company, good bank, and he will lose complete credibility. So it happens in a matter of time today. The reason being, everything is controlled by system today. Earlier it is not so. Earlier nobody can stop. Nobody knows, right? Earlier if a director is disqualified, unless director says, you may not be knowing what it is. Because what we do, we file form 32. Some 4 column is there, we write and we throw, and they do some scrutiny and throw inside, right? And nobody knows who is disqualified. In fact, section 274 there in the Companies Act, section 283 were there in the Companies Act. Who was bothering that whether director is disqualified? He is automatically vacated. In fact, more than 50% of companies, they may not be knowing they are vacated, still they must be acting as a director. And I'm saying under old act, before DIN, before the era of DIN. See, if at least DIN is there, they are blocking it, ensuring somebody should is not acting as a director. But under 1956 Act, it's not the case. So they can sign still after not filing 5 years also. After under section 283, they are automatically getting vacated. Still they may be signing as a director, and bank may be dispersing the loan, and you would have got so many licenses, which is wrong in the law actually speaking. Today it is monitored. The same sections are there. There is a section 274 in the old act. Here it's section 164 in the new act. There is section automatic section 283 in the old act, 56 act. Here section 167 in the new act. Same provisions only, not much difference, except one difference, where the disqualification was applicable only for public company. That's what here today there are so many cases are filed in the High Court. That disqualifying the director is not legally valid. So many cases are filed, including I myself got many of the things done with the High Court. And all the matters are pending for hearing, final disposal. Because here the old act 1956 only disqualifies a person to act as a director in a public company. Only in the new act, section 164 only says he will be disqualified to act as a director of a private company. But what now Ministry has done, they have taken a 3 years non-compliance of filing, 2 from the old year, that means 1956 Act, 1 from the new Act. That only now questioned in the High Court by many of the professionals, including me, saying that the 3-year disqualification is not there, because the old law only disqualifies a person to act as a director in a public company. The new law only disqualifies a person should not act as a private company. Correct? In new law there is no 3-year violation. And neither 3-year violation in the old law nor 3-year violation in the new law. Right? How this can be combined? Who is giving an authority? This is the question is raised before the High Court, and the matter is prejudiced today. And of course they are giving temporary stay. Honorable High Court is giving a temporary stay whereby they are activating the DIN again with that temporary stay. But the matter is still pending for disposal. So why I am saying all that, the position now today is so fast, and the entire control is kept. It's not like earlier. Today same way all these things are brought under Insolvency Bankruptcy Code. As I told you, the strike-off provision 248 is invoked by Registrar of Companies. Earlier if they close the company, we may not be knowing, because we will be going and giving to the counter. But today, if the moment the Registrar of Companies accept or initiate the action of strike-off and strike off the name of the company, the master data will show company stuck off. So no filing can be done. And today the website, website is nothing but it's a constructive notice that somebody deal with the company, whether it's a banker or stakeholder, anybody. Today they have an opportunity to go and see. In spite of that, they are deceived that nobody can help it. That's why the law says that it's a constructive notice. Everything is online. If you want to deal with the company, go and see the Register of Companies and download the file and act accordingly. So when the company name is struck off, means name is removed, nobody will deal with the company. Is as usual, there is no company. Correct? So that's the reason Register of Company gives an opportunity. You tell me whether you want to do it. So we have to write say that I will complete all my filings, I want to run the company, you don't initiate strike-off option. This is one thing. So probably with that letter, provided we give a commitment, everything will be filed. The registrar company can withdraw the strike-off process and allow the company to file and complete the process, and the regular function can take place in the company. This is one way strike-off is happening. The other way is section 248(2), whereby company themselves can make an application. That you must be knowing, STK2, whereby company, if they want to strike off the name, remove the name of the company. In fact, colloquially we have a lot of contexts, closure, removal, but actually law says strike off only. Okay, striking off name of the company from register. Okay, so in subsection 2, company voluntarily they can file after ensuring they are filing all the nil return, whatever it is there. They can voluntarily file that they want to strike off the name of the company. Here please note, in both the cases, the directors and whatever the claim against the company is not relinquished. It will be treated as equivalent, company is not closed. See, many people are thinking, even many of your clients must be thinking, even many of my clients also may be thinking that by striking off name of the company, they are free. In fact, striking off company only will bring serious consequences, because after they are giving opportunity also, you are not ready to comply. So that shows the intention that you don't want to comply. Purposefully you don't want to comply. Because striking off is not that I am just like that, I am giving a power manipun சொல்லுவாங்க தமிழ். Power manipu கொடுக்கிறது இல்லை strike off ன்றது. Strike off ன்றது என் ரெக்கார்டை நான் clear பண்ணிக்கிறேன் department. I am a registrar of companies. I don't want to simply pile up lot of records in my website, and the law provides that if there are continuous failure in filing 2 years, department has power to strike off, so I am exercising my power. So here I am not giving any power manipu to you. In fact, it is the other way around. You are taking a serious call on that. You are running risk actually by allowing them to do that. Because if you see, even the notice will carry that directors will be prosecuted. Even if you see the provision of section 248, that itself will carry a provision. Subsection 3, if you see that, you can see, whereby it says, where if any loan or claim that will not be closed, in fact that will have a lifetime, and the director is not relieved at all. In fact, for the purpose of that claim, why the terminology what I am saying, it can be a loan, it can be liability, it can be anything. Correct? It can be anything. So as if the company is not closed. That's the position if the company has got a claim. In fact, the registrar of company, before striking of the company, it is his duty to ensure whether the company has got asset, whether they have to close all that. It is their duty, but still the directors are not relieved. It is as equivalent with respect to the director. So I am saying that company name alone won't be there. Okay? And you need not to file further returns because you can't file. Okay? You need not to file. That is the only benefit company may get, but at the cost of the prosecution that may be initiated by registrar of companies. That in spite of my advice also, you are not prepared to file it. So that is the reason, the best way would be that if a notice comes, we can give a letter to the registrar of company. No, I want to comply it. Let me file it, because see, there is no provision under law except compounding of offence. Okay, even compounding of offence can be done only when the compliance is done, but done with a delay. You cannot get compliance and compounding that I want the exemption from filing accounts or annual return. Can you get it? You can't get it. And nobody has authority, including the court, to say that no, this company need not to file accounts, need not to file annual return. So that is the reason the department or the section even says, even a notice served by the registrar of company says that the action will follow. Reason being, just because the company is closed doesn't mean that whatever you ought to have done is spared or is left it, or it is what to say, that you are relieved from the responsibility. No, you are not at all relieved from responsibility. The company is not relieved from responsibility. The directors are not relieved from responsibility. Okay, this is one scenario. Okay, another scenario, I'll take you to section 252, where you are genuinely you want to run the company. Surprisingly, you are saying it's happening in many of my clients, and they are running and saying, "Sir, I have got a property in that. I don't know. Suddenly, I'm seeing name is coming struck off." And they are saying, "Sir, I'm doing a turnover of more than 20-30 crores. Today I'm seeing I got shocked. It is there. It is what I'm saying is a routine thing is happening in the corporate world." So, when turnover itself is 30 crores, how they are closing it? You would not have updated the address, so registrar would have sent pursuant to the position of 248 and 3 reminder you would have given, then he will have closed. Now, what is the recourse is available? Now, property is there in the company, registrar has removed the name from the registrar. Can the company exist today? As I told you, the moment you remove the name, means strike of the company, that by operation of law, company is dissolved by operation of law. That means it's dead. A person who is dead, can he sign an agreement? No. Can he pass something to you? Can you say that that person has given to me yesterday? Day before yesterday is already dead, but yesterday he has given. Now you can get it. You can't get it. That's the position when the company name is not there in the register of companies. Because, yeah.
Small doubt. They are publishing quarterly newspaper reports,
Mm.
quarterly results. Will it not be a constructive notice to registrar? I mean,
Registrar?
just asking.
Oh, you are giving constructive notice to registrar?
No. When you say
Information.
constructive notice,
Okay.
why it cannot operate? Because oppositely they cannot also act. Suppose a company is giving a quarterly results of
To whom? To whom? SEBI, okay. Let's discuss on register of companies. You are giving to SEBI, that's different altogether.
No, not SEBI, sir. In the newspaper,
Hmm.
company is publishing quarterly, hourly report, balance sheet, everything is publishing.
Okay.
By some mistake, they have not updated the address or something.
Hmm.
In that case, can it not be a constructive notice to ROC? When
Oh.
you say constructive notice only to others,
Oh.
is ROC exempted of that national law?
Ah.
I'm just asking.
Yeah, correct. But the law does not provide in India that way. Where if I give, for example, I'll put it this way. My name is Dhanapal. If I change my name as Velu, okay, Velu Swami, you presume Velu Swami. I give all the paper in India. I'm Velu Swami. Okay. Tomorrow I sign Velu Swami without following the procedure I'm saying, because there's a procedure how to change the name in the Gazette. All that is there. I've not done it. Okay. I'm just giving the newspaper. Okay. And I'm the Velu Swami. I'm not Dhanapal. Then again next year I am giving another name. Okay, I am saying Kandasamy. 2020 I am Kandasamy. I am giving in all the paper in India. Kandasamy. You tell me, can you take it as a deemed notice? Every department in India that I am Kandasamy for the purpose of 2020. I am Veluswamy for the purpose of 2018. Is it so? Can it happen that way? Because it cannot happen. The reason being, the disclosure what it is given is meant for the shareholder, not to the department. Please understand. What are the regulations of SEBI or anybody says, whether it is IBB or whoever it is for the stakeholder, not for the department. In fact, there is a separate law which says you do 1, 2, 3, 4, 5. Right? But here we cannot try to find out something else which is not there in the law. So here, whatever we say, okay, even what we can maximum go, we can go to the High Court, say that no sir, I have given all the paper. In fact, here it's happening whereby if you are not able to provide a filed returns, okay, our Honorable NCLT is not reviewing the company at all. It is going to that level. Company is very much running. Property is there in the company. It has been played before Honorable NCLT by somebody. Okay, but they were not able to prove to the satisfaction of Honorable NCLT, saying that the company is in existence. Probably the NCLT require the income tax file and recent records to ensure that company is live. But unfortunately, company is not able to give and dismissed. The strike petition is dismissed. Here we are not even able to convince the NCLT by giving a record. Where the question of constructive notice from newspaper. So that level we can't think, and we are not permitted to actually. We can't think. We are not permitted to think that level. Let us try to follow the law, what it says. Here, the power of registrar of company, what he can do under section 248(1), that he is exercising. Same way as a company, the power of subsection 2 of 248 gives the power to the company that you can voluntarily go and file and close. That too, when you complying entire provisions. What I am trying to say here, as I told you earlier, there is none of the company so far in India would have exempted this particular company alone, don't file anything. See, whether whoever it is, you are a company, under Companies Act, whether you may be a state government or central government, like an IBC. Like whether you are state or central, I can initiate IBC under you, and government company itself can be brought today. That's a scenario today. So like that, company, that's all. Whether you are a government company or a private company, as long as you are a company, you have to obey the laws as prescribed under the Provision of Companies Act. Now, under section 252, which I was deliberating, whereby under section 252, the company wants, there are two options available. One is going on appeal under section 252(1), and second one is filing an application directly. Here the first one is going on appeal by person who is aggrieved by order of ROC. That's the main difference here. See, strike off, the company is struck off, already it is struck off by the ROC. What is the recourse available to me? I wanted to run the company, genuinely, by mistake it has happened. I have not updated my address, or my intention is not to do that. Okay? Now what to do? Section 252. We can go on appeal against the order passed by, that means the action taken by the registrar of companies, striking of name from the registrar of companies. That's an appeal under subsection 1. The second one is we can make an application in the opinion and convince the court or NCLT. Now there is no court, it's NCLT now. Convince the NCLT that it is just and equitable to revive my company. But in the first scenario, under section 252 subsection 1, we are going on appeal against the action taken by registrar of company, removing my name from registrar of companies, whereby the NCLT will serve notice to registrar of company and will seek explanation from registrar of company, why when company is running, when so much is done, how could you can close this company? They can get a representation from registrar of company. Accordingly, they can dispose of, means they can revive. If really there is a mistake on part of registrar of companies, the NCLT got a power to again bring back that means passing an order of revival. So the company comes back again. If it is proved that there is a mistake on part of ROC. That's one scenario. The second scenario, we don't want to go on appeal on ROC decision. But we know that we have done mistake. We should have filed something, we have not filed it. I am a law-abiding citizen. I understand I have done mistake under law. I want to correct it only, but now it is a recourse available to me. I am filing an application before that. I can always say that there is a company and there is a property in the company. I was not in India. I was out. My duty supposed to do, but somehow the situation that forced I have to stay away. And nobody I can authorize here because property is there, many things are there. So it is not ill motive, but it's so forcing situation, I couldn't follow anything in the law. But the property there in the company or something is there in the company, which none of the interest of the person is affected. But there is a mistake that I am accepting. Still NCLT can consider it and think if just an equitable to revive the company, still NCLT can pass an order. Irrespective of striking of orders passed by the registrar of company, even without giving opportunity to the registrar of company to represent. Means registrar of company cannot object. In subsection 1, registrar of company can object. In subsection 2, registrar of company will not come into picture at all. If you can properly able to convince the court under section 252 subsection 2 that due to these factors all these mistakes have happened and some registrar is done. So I am not here to question my registrar of companies, action of registrar. But I want the company for following reason, following genuine reason. If really court feels, yes, these are the genuine reason, whereby this person deserves the company back, then the NCLT can order revival of a company. So strike off of company is one process under section 248. Revival of company is one process. Restoration, we call it as restoration. Restoration of company under section 252. So both the sections, there are two situations I explained to you. Under 248, ROC themselves they can shake up the company, and another scenario, company themselves can make an application to close. Both are coming at 248. Same way in 252, two scenario. One is that we can go on appeal the decision of ROC removing my company name. The two is making an application requesting NCLT to consider the genuine reasons. I am not questioning anything on the ROC actions. So this way company can be revived. Right. Here I will take you to, probably I will take the questions at the end. Probably I can take another 15 minutes time. So probably after I finish you will have more questions. Now I want to take you from strike-off and winding up to liquidation. Right? Now let's see what is liquidation. See, unfortunately if you see that section 272, section 365 in the Companies Act BAR Act, whoever have a new Companies Act BAR Act 2013, in fact you must have been carrying, or including me, we must have carried the BAR Act unnecessarily, all these provisions for nearly 3 years, because Insolvency Bankruptcy Code has come only in 2016. Okay, that too in 17 only they brought into action. That means the NCLT has been come into force and all that was happening. So, but till then, what was happening? 2013 Act, nearly 95 sections, which was there right from 270 to 265. All the section, none of the section is notified, even now. But by virtue of introduction of Insolvency Bankruptcy Code, all these sections stand deleted from the provisions of Companies Act 2013. Meaning that after Insolvency Bankruptcy Code come into effect also, with effect from 1/12/2016, there was a provision there in the Companies Act 2013, section 272, section 365, which was not even notified. Even single section was notified right from 1/4/2014. No single section notified, that entire 95 section. What we were doing is, the corporate were doing is, we were doing entire winding up under the provisions of 1956 Act. That means, in a particular scenario, there was two laws in operation. Very pathetic situation. 2016 end and 2017 first 6 months. The situation was that you have to follow the process for winding up as per the provisions of Companies Act 1956. Okay, 433 to 470. And certain this thing we are for liquidation purpose we have to come under Insolvency Bankruptcy Code. So what we have to do under section 270 to section 365 of Companies Act 2013, you can't do anything because it is not modified at all. But after notification of section 265 of the Insolvency Bankruptcy Code, that section of Companies Act, means winding up provisions of Companies Act in 2013 Act, stand abated, means has not come into force. So there was a piece of law which was not given into effect at all. It was there in the provisions were there in the BAR Act as a provision which is yet to be notified. So now the situation is very clear. Now the Insolvency Bankruptcy Code has completely replaced the entire winding up process, entire resolution process, which have been followed by Companies Act earlier. Now, except in few things which is retained, which I wanted to tell you. If you see section 271, which is equivalent to section 436 of Act 1956, section 271 of 2013 Act. 270 and 271, 272, these sections are there. In that, there are about 5 situations are there. There are 5 situations whereby the company can be wound up. Here, winding up is, probably present tense we can say, winding up. Wound up is a past tense. Okay, that is, there is a difference. Winding up is it's in the progress. Can be wound up means it can be, the winding up can be brought under this section, can be wound up. So that's why I am using these both words, winding up and wound up. So now if you see that under section 271, Section 270, 271, 272 of New Act 2013. How a company can be wound up. There's a 5 situation. In that 5 situation, one is that unable to pay debt. The 2 is company by special resolution. Companies by special resolution can bring the winding up. The another situation whereby you must be knowing that BAFR. Okay, when the scheme is filed, the recapitalization scheme is filed, SICA provision, I'm saying, when the scheme is filed, recapitalization under SICA provision, when the scheme is not workable, means like how we talk about resolution plan under insolvency bankruptcy code, same way. When the resolution plan is not approved, gets rejected, and that triggers liquidation under section 33 of insolvency bankruptcy code. Like that, under BFR, if a recapitalization plan is not approved, then that company has to be brought under winding up. Got it? That winding up process is one of the provision under section 271 whereby the company can initiate winding up under Companies Act 2013 and the equivalent provision under section 1956. That's one scenario. The another scenario, if the company is not filing its balance sheet continuously for 3 years, the Register of Companies can initiate winding up process under the provision of section 272. And another scenario, it is just and equitable in the opinion of Register of Companies that the winding up process should be brought in. That can be done under section 272. These are the 5 scenarios. Earlier were there. Now, after insolvency bankruptcy code, unable to pay debt has completely come under the insolvency bankruptcy code. Okay, there is no unable to that concept under Companies Act whereby you can bring a winding up process has been brought under. Same way, company by passing a resolution also has been brought under the provisions of IBC code. Here if you see provisions of IBC code section 7 where a financial creditor can file application, section 8 and 9 where operation creditor can file application for the reason of unable to pay debt. So the winding up now took a shape of insolvency under section 7, 8, 9. Okay. Same way, a winding up by passing a special resolution by the company, it can initiate a winding up process. That has now come under section 10 of insolvency bankruptcy code, where we call it as a corporate debtor initiating CRP process, insolvency bankruptcy. Okay. So this has come. This is nothing to do with the voluntary winding up. This is a separate provision called voluntary winding up under provision of 1956 Act. Now an equivalent provision has come under insolvency bankruptcy code whereby section 59 a company can bring a voluntary liquidation. There's 2 scenarios in a liquidation. One is liquidation by the company by compulsion of law and voluntary liquidation. When the liquidation of company will happen by volition of law? Only when on the insolvency bankruptcy code, when an application is filed by either by financial creditor or operation creditor or by company themselves under section 8, 9, 10 respectively. Okay? And RP is appointed, resolution profession. IRP is appointed for 30 days time. After he does all his function, whatever the duties prescribed section 17, 18, 19, all he executes, then after 30 days RP is coming under IBC provision. And RP does exercise of 5 months because 6 months time is given for IBC, and again the 6 months can be extended for another 3 months, so totally 270 days time. A CIRP process, corporate insolvency resolution process. Right. This process, what is this actually? Is it liquidation? No, this is a revival process. So corporate insolvency resolution process is a revival process. This is nothing to do winding up, this is nothing to do liquidation. Liquidation takes place only after this CRP process gets over. CRP process is 180 days, with the approval of NCLT it can be extended for another 90 days, so 270 days time. So resolution profession is appointed and the resolution profession gives an advertisement and receives the plan, and plan is presented before COC. Before this ordinance 70% should approve. After this ordinance today 66% approval is sufficient. So it should get an approval not of blessings of the committee of creditors with 66% today. Suppose it is not getting a blessing of committee of creditors today, then the a committee should take a decision of either to take for liquidation, or even if the committee is not taking also, the law on its own should take the company into liquidation, where the RP should file an application under section 33 of the Insolvency Bankruptcy Code for initiation of liquidation, whether the committee takes decision or not. So then only the entire liquidation process is started. So liquidation today, what we are discussing, is not there in the Companies Act. Please understand. It is because the topic is coined, right? It covers both Companies Act and the Insolvency Bankruptcy Code. Fortunately, I happens to be a RP and I have practiced Insolvency Code, so I could handle this topic both the sides. And the Company Secretary, Companies Act as a Company Secretary, and Insolvency Provision as an IBC Code. So I could correlate both the things and see how the law today, and I could explain how the law today has evolved. So today the law has evolved, whereby the winding up has become a liquidation, and there is no liquidation or winding up in the Companies Act. Only 2-3 situations where still winding up retained. Here this is a basic difference that you ought to understand. Because here you should not carry in the mind that okay, winding up is abolished in the entire act. No, in fact there are some more confusion still there, clarity should come. As I told you, there's a 5 scenario. In that 5 scenario, only 2 scenarios come into the IBC. Again 3 scenarios still there in the Companies Act only. Meaning that still a registrar of companies can initiate winding up under the Companies Act 2013. Because those sections are notified. That's those particular sections alone. So winding up with respect to that 3 scenario, where non-filing of balance sheet, continuously for 3 years, and for failure of a rehabilitation plan under SICA, and just an equitable ground. In this scenario, even now, the registrar of company can initiate winding up process with the High Court under Companies Act 2013. In fact, it took almost 4-5 months for us to understand the difference. What is happening? Because it's very difficult to understand. There is a very minute difference.
Why it has to go to High Court? Is not with the NCLT?
No, there they have to go to the High Court only. Because there NCLT is not there. But still, the recent amendment has come, the ordinance, whereby the pending winding up cases should be transferred to NCLT. Pending, all the winding up matters has to be transferred to NCLT. But here, I have my own doubt. Why I am saying this, as they rightly question, why it has to go to the High Court, not NCLT? Because in Companies Act 1956, NCLT has not got notified at all. Provision I have to follow under the Companies Act 1956, and the jurisdiction of it will come under NCLT, under IBC. Because the jurisdiction is, though NCLT has got a jurisdiction on many matters under other areas, like section 130, where revision of accounts and recasting financial, revision of financial statement, all that. There are about 35 items are there where we can approach NCLT, including class action suit and 147, 240. Every there is a provision to, every provision carries the inbuilt provision where we can get a remedy from NCLT. But winding up can be filed with the NCLT. That particular provision is not given effect. Still, it as on date it appears that still we have to go to the, in those grounds they have to go to the High Court. Probably a clarification should come on this. But today the ordinance has come whereby it says all the pending matters. What is that ordinance? Why it has to say that pending matter should come? What was pending before that? When the transfer of proceeding rule 2016 came, all the matters pending before, in fact I have to say on 1st June 2016 when the NCLT has come into effect, right? Before that we were appealing for a case, we never know from tomorrow NCLT won't be there. Suddenly they notified with effect from 1st June, CLB is dissolved, NCLT has come into, but there is no sitting members. They said legally NCLT has come. So what happened the position of the cases? The cases are dug and kept inside. That was the time where people were completely going what to do. Okay, situation was completely unclear. Where the law says NCLT by notification NCLT has come into effect. But there is no hearing take place because there is no member appointed at that time. But the same law says CLB is dissolved with the immediate effect. So all matter were pending for some time. So then the government came out with the rule, transfer of proceeding rule, whereby it's a power given to the ministry to transfer all the matters. Earlier that power was not given to the ministry because it has to transfer from High Court to NCLT. That should be a power given to the ministry to transfer it. So that's why this rule has been introduced. By this rule, all the matter pending before, including amalgamation, winding up, all that got transferred. So got transferred by virtue of transfer of proceeding rule only. Not that simply it got transferred by virtue of IBC or Insolvency Bankruptcy Code. There's a rule, separate rule, what to transfer, what not to transfer. So through that rule, all the amalgamations, all winding up got transferred. But in winding up alone, there's a provision in the transfer rule. What is that provision? The provision says, in case of winding up has been initiated, if the notice has been served other side, that should not be transferred. If the notice is not served other side, that should be transferred. Means, after filing a petition, if the notice has been served and acknowledged by other side, then those matters should still be with the High Court. That's what the transfer proceeding rule says. So earlier the situation was that there were two different winding up was taking place. One winding up where the notice is served with the High Court in 2017, what I am saying, all this confusion was going on. So the matters whereby the winding up, the notice has been served, that stay with the High Court. Okay? Where the notice is not served and acknowledged, that has got transferred to the NCLT. Now because of that, still confusion was there. That is the reason ordinance, whereby they brought the amendment, whereby all matters before the winding up before the High Court shall in fact, option is given to make an application and bring it here. It is not that automatically transferred. It is only an option is given now. That you can make an application whereby we can take a permission to come to the NCLT. That means to get that pending matter before the High Court to transfer. Even now certain winding up matters pending before the court, where the notice has already been served when the law was introduced, IBC law was introduced. So because of that only now the ordinance enables whereby all the pending matter before the High Court, it should get transferred. Fine. But even now, the winding up which I said, which is left out in the Companies Act, that has not got transferred. So today in Insolvency Bankruptcy Code, what is possible? A petition can be filed, that means application can be filed by creditor, financial creditor, operating creditor, all that's there, by creditor, and voluntary liquidation can be filed by corporate debtor. So these two categories has come, as I told you. So other categories are retained. So unable to pay debt and company by passing special resolution. In fact, if you see that recent amendment says that the company should pass a special resolution. Now only they are bringing in tandem with the old Act, Companies Act. Because earlier if you see many companies without even passing resolution, because nothing is required before this ordinance, company can simply come out with the initiate the insolvency process. That's the reason many companies voluntarily, because there is no approval required, special resolution. So voluntarily they filed application under section 10, right? Now after this amendment, ordinance, now the company has to pass a special resolution, which was the original provision of there in the Company Act 56, where company has to pass special resolution to bring it. Now they are bringing in tandem with those provisions. So now all the pending matter before High Court will come under the Insolvency Bankruptcy Code. Fine. Now, situation what I explained is strike off and winding up and liquidation. When the liquidation takes place, the liquidation under insolvency bankruptcy is not directly coming. It's not directly happening. It happens only after entire insolvency process, as I told you, 270 days gets over. In two scenarios where the resolution plan has come but not got approved by COC. And another scenario, resolution plan has been received as approved by COC, where NCLT is not approving it. That authority is given to NCLT. Even in spite of approval of COC also, still NCLT can reject the resolution plan. Then also it goes to the liquidation. Third scenario, there is no resolution plan in 270 days time. The third scenario, it is going to the liquidation. A separate application has to be filed. So now if you see that the entire insolvency bankruptcy code which has been introduced is nothing but just to give 270 days time to give effort whether a company can be revived or not. But is it not that provision was not there earlier? It was there, but under SICA, if you see that, SIC Industrial Undertaking, only the manufacturing companies alone covered. And that too, it was taking years together, more than, nearly in many cases it took 10 years, in few cases where I can seen more than 10 years nothing was happening in SICA. It was pending. And board itself is single board sitting in one place. How it can, today if you see 12 benches are there. See, if you see that, the entire matters are handled under Insolvency Bankruptcy Code by 12 benches of the NCLT. But earlier under SICA only one BF are there and 2-3 members were sitting there. With that, how many company can be educated by them? That's the reason now the lawmakers felt that it is better to bring Insolvency Code whereby the provisions of SICA is no longer required. That's the reason I said one of the winding up that is removed has been brought under that. Now all that, because in the transfer of proceeding rule which I referred, there is one provision whereby that enables the matters pending before BFR also get transferred to the NCLT. There is one more provision there in the transfer of proceeding rule. So the matters before High Court, the matters before Company Law Board, the matters before BFR all have come before the NCLT today by virtue of transfer of proceeding rule. So now if you see the net result, all the matters have come under the purview of, within the purview of NCLT. And here, with respect to the insolvency and liquidation of the company, what is the insolvency and bankruptcy? Why the law is not insolvency and liquidation? Have any idea? Why it is not insolvency and liquidation? Liquidation code. We can have insolvency and liquidation code. Because after insolvency, then only the liquidation process starts. Why it has to be bankruptcy? Anybody have idea?
Individuals.
Pardon?
Bankruptcy meant for individuals.
So,
Inability to pay.
pardon?
Inability to pay.
Inability to
See
pay.
the state of where we are unable to pay anything.
Yeah.
It's inability.
No, he has already answered what it is, the insolvency bankruptcy code. The insolvency is related to corporate and bankruptcy related to individual. Okay. The state which is known as insolvency for the company is the state is known as bankruptcy for the individual. It's very simple. You can't, now, of course, earlier situation was different. Before the Insolvency Bankruptcy Code, there was two acts, Provincial Insolvency Act, Presidential Insolvency Act. Presidential Insolvency Act applicable only to 3 states. Provincial is applicable other than 3 states to entire country, which was there earlier. So before Insolvency Bankruptcy Code, the entire insolvency was has been done under the Provincial Insolvency Act and Presidential Insolvency Act. These 2 acts is abolished today. But after the inception of, after the advent of Insolvency Bankruptcy Code. So after the advent of Insolvency Bankruptcy Code, Provincial Insolvency Act, Presidential Insolvency Act, SICA, SIC Industrial Provision Act, all this abolished. And this got replaced by Insolvency Bankruptcy Code. Same way, there are many provisions. If you see the provisions of Insolvency Bankruptcy Code, which has got a section 248, which says, notwithstanding anything stated in any other law. That's why it is code. Because with the law you cannot have this language, whereby notwithstanding any other law says, I wanted to do this. No. There will be a legal force will be, you won't get that legal force. That's why it is code. The code, why it is introduced as a code, not as a law. Insolvency, bankruptcy law. No, it is not introduced as insolvency, bankruptcy law. It's code. The reason being, this is the guiding force for the entire financial failures of the country. Corporate financial failure and individual financial failure. The code is nothing but, it is a guiding force for the entire financial failure. This is not the law to implement. This is a code and policy to ensure all the financial failures are addressed. So if in case the financial failures are not revived, or the companies are not revived, or individual is not able to come out from, then take them to liquidation. And declare the individual as a bankrupt. If the company become an insolvent and they are not able to revive, it become a company which is liquidated. If he is an individual, he will be declared as a bankrupt. So this is a basic difference between. So strike off, liquidation and winding up and bankrupt.
So this 270 days is a must for to go for a liquidation, or the RP can initiate the.
There is one provision there in the Insolvency Bankruptcy Code under section 30, whereby it says, in case the COC members, that means the Committee of Creditors, take a decision before expiry of the period of insolvency under section 12 of the Insolvency Bankruptcy Code, means 180 days or 270 days. Okay? If the committee decides there is no hope, it has to be taken for liquidation, then it can be taken for liquidation with the decision of committee. RP cannot take it on his own. RP acquire that right, or I have to say that responsibility or duty. RP gets a duty only after expiry of CRP period. Whereas COC, if they take decision, even on the second month itself they can do. They can bring liquidation. They have a power under section 30. But for that, a COC has to pass a resolution that they want to take the company into liquidation without exploring the revival. Say for example, there is no asset and nothing is there. Okay, and it has come into the insolvency. Now what is the use of trying something? There should be something to try. If nothing is there to try, what is the point of 9 months they are attending meeting and they can take a decision that time? And there is no buyer also. What is the use? Better to take a decision, initiate a liquidation process under Insolvency Bankruptcy Code. This is the position of entire Insolvency and Bankruptcy Code. And I hope I could be able to clarify a few aspects. If anything left out, you can tell me so that I can cover up those aspects. On strike off, liquidation, winding up, it's a very complicated thing actually. It's not routine thing actually. Because as I told you, it involves the substantial law, it involves procedural law, it involves the practice. High Court and NCLT, everything, we should have some idea about what's happening there. And now what is changed and what got changed, all that we should have idea, then only we can correlate everything. Otherwise it's very difficult to correlate. Now it's very difficult those days, a year back, to understand what exactly got changed in Companies Act. No, it was very difficult. In fact, we have to spend a lot of time to understand what exactly has got changed and why IBC has to come. So, if you have any doubts, I am here to discuss and give clarity on that. To that extent, I am aware of it. So, thanks for the opportunity given. Please, you can raise any queries if you have. I am ready to answer.
Sir, after the striking off, whether if the company wants to go for winding up, whether they have to initiate some process for that, or striking off is sufficient for that?
Go ahead. It's not working, sir.
Check it.
Check.
Can you repeat the question, sir?
So after the striking off, the company wants to go for liquidation actually. Whether they have to start
After striking off, there is no liquidation.
there is no, not
That's why I said the strike off and dissolution by operation of law. It automatically takes place. Either ROC does on their by giving notice under subsection 1 of 248, or company files a STK 2 under section 248(2). By striking off, it automatically dissolution, like an amalgamation order. By taking an amalgamation order, dissolution automatically takes place. The company is dissolved. So similar way, by striking off and by putting in the gazette, the dissolution takes place. In fact, ROC will be sending a letter after a company is dissolved.
What's the difference between this form STK2 and the form erstwhile form FTE?
Fast track. See, not much different. If you have to say that their 5,000 rupees standard they were collecting, the STK is, see, now the entire form is renamed, that you must be knowing. Incorporation means INC. STK means strike off, yeah.
No, actually the procedure seems to be the same.
Yeah.
but for that special resolution which is
correct.
specifically mentioned in STK. But in FTE, you had to just file those balance sheets saying whichever is nil balance sheets and things like that. Now, this clause, was it there? The 2 immediate preceding years, if you have not.
In fact, there should not be, our company should not have been in operation for 2 years.
Yeah, I mean, the company, those, I think FTE, even if you had filed.
FTE, there is no that condition whereby you can go anytime.
Yeah.
But here in STK2, you have to show that company is not in operation for 2 years. Meaning that suppose there is a transaction of 50 lakhs last month, I cannot file now voluntary this thing under section 248. So I cannot go under strike off now. Company cannot do voluntarily today.
So in the bank statement should not show
Yes.
any.
There should not be any transaction for 2 years.
For 2 years.
Yes.
Even the mandatory, like see nowadays all your mandatory payments like EB things are all routed to your bank.
No,
accounts.
that will not be deemed as a. See, what their law provision says is that you should not have done any business.
If we are able to prove that it is only.
See, idea is that, we have to understand the logic this way. After doing some transaction last month, today, this month I want to file means, what is your intention? That means something you are doing it, suddenly nothing should make you to close the company. So then in that case, any transaction will be done and company will be struck off and people will run away, right? So in order to ensure that, the idea of struck off itself that whether department does or whether even company, the idea is that you should be inactive. You should be inactive for some period and you should feel that I have decided not to do anything. And I was not doing for last 2 years also.
That is why you used to give that indemnity, right? The company, the directors put together and the individual indemnity was also given.
That is then FTE also, here also. Both are things. Why this indemnity? In fact, without indemnity also, as per the provision itself, they are liable. But by filing indemnity, director is committing that says I am liable for everything. It's not that company is closing that I am disowning the liability. Because the company directors are signing and filing the affidavit and indemnity. That means company name alone is removed so that I need not to follow the process. That means regular compliances, filing accounts and other things. So I am relieved from that responsibility. Otherwise, the entire claim, liability, obligation as a director, everything remains same. In fact, if you see the section, it says the liability of the director and claim and all that remains same and stay with the company as if company is not struck off. For that purpose, company is liable to take action against the director or for the purpose of claim. That can be, suppose the income tax has a claim, for example 2 crores on the company, the name of the company is not appeared. That doesn't mean name is not appearing there out of the, still income tax can issue notice as if company is not struck off. Still the director is answerable.
So what should be the last date of financial statement or something like that for 248.2?
248.2 you should not have done any operation, but you should file a nil balance sheet and nothing is there.
So you can pass a resolution for closing of the bank account and then go for STK2?
You can close, but you have to prove that there is no operation for last 2 years.
So what, the annual return we have to file up to date or any?
We have to file, they are insisting you file up to date.
But name is already taken off, sir. How to file? First already the name is taken off.
That's why I said 252, we have to make an application saying that by mistake it has happened. I don't want to violate the law, I don't want to face the consequences, I want to pay the penalty and file everything. As I told you, we can file an application under 252.2. It's not appeal. Appeal means that I want to run the company. He has done something wrong. Department has done something wrong by mistake they have done. Inadvertently they have done. Here application is not inadvertently. It is just an equitable grant that I want to comply the provision. So give the company back. I want to file everything. Then I will see the possibility. Otherwise I will do closure on my own.
But do you foresee any sort of plan being proposed to make it any easy way? Because some more than 3 lakh, 4 lakh innocent directors are involved in inactivity, etc. Any remedy will be given.
Innocent directors. innocent directors? That you tell me first. Without knowing they became director, or
See, the total capital itself.
see, the moment you are director, you cannot use the word of innocent. Yeah, innocent cannot be a director.
Small default.
Should not be a director.
Very
No,
small default.
no, director is a statutory position. Can you say that, see, innocent, okay. Probably you can understand that context for a transaction. Suppose in a transaction we can always say he is an innocent person who was not, he is not aware of what has happened. You can't say that, attach that context with the, you can't tag that innocent word to a person. You can tag that innocent word to the transaction, not to the person.
Actually, in SDK 1, we are receiving notice letter first 14 days period, again 30 days period they are giving. The 30 days before completion of that 30 days, if we can go and give the letter to the ROC saying that give me some more time for at least 2 weeks time to upload all the returns. So they completed all the IT returns and we want relaxation time of additional more than that 30 days, 2 weeks time. Whether this ROC is allowing this additional days or
You will give.
that letter has to be put it in Tapal and taking the acknowledgement, or we have to send it in the procedural contact.
No, at least now company has gone to that level. Let us go and talk to the officer and say that I want to do that. Since that attention is not given only, it has gone to the level of killing. So at least now let us take a pain of going and approaching a concerned officer, because the letter by mistake is not reaching them. We will be losing the company. It is not simple letter where we are explaining something, or where even if it lost also we have got some proof and say that no, I filed a letter, so you can't question me. Here company name will be removed. After that showing the proof that I want to, all that it won't help. In fact, it is purely a discretion of registrar of companies. The moment company,
Here register of companies is RD you are telling.
no, registrar of companies. Regional director will not come into
Who is
picture.
digitally signed on that letter? No sir, he will take a call to give the relaxation of additional 14 days.
The question of signing person is not, it's only Ministry of Corporate Affairs. This function is done by registrar of companies. So the decision will be taken by somebody in the, that means ROC or below ROC, anybody can take it. Signatory is that particular task is given to that officer. He is signature, he is putting it sending. It's not that that person should do. X is signed in notice. That doesn't mean X only can give time or X only should consider. It is MCA. X is representing MCA.
So we have to give the letter here in Chennai office. In ROC.
You can give a file a letter with the registrar of companies and find out, as you said, the signatory who was signed. At least if you are not able to reach ROC, at least somebody who was signed, you can say that I already filed. Please take on record that I want. See, the idea is that here ROC is not going to gain anything by striking of our company. Are you going to gain anything? Nothing. It is extra job only for him. Right? Otherwise he will be concentrating something else. Why to send one notice, two notice, then he has to do all the process in the back end, then again he has to give an entire detail for a gazette publication, then follow up and get the gazette publication. This is a tedious job for registrar of company. Closing. So closing is not his intention. See, probably by mistake sometimes happens. Sometimes 1 year filed company system may pull up. Means it may be pulled by system. ROC may not be checking because everything now through. That's how many directors, even few cases where company, there is no default in filing. Still the director deal is blocked. Okay, immediately we went and we told the registrar of company, he has understood and he has immediately wrote to the, in fact that's why the Chennai list would not have been there more than 2 months. Chennai list alone was not there because we were represented and told him that by mistake everything is happening. My clients have filed everything, we have given a letter and we told also he has agreed, he has understood, yes, system would have pulled wrongly, I will write to the, but only thing is we have to give a proof that company has complied, that means there is no violation. Then he has to write to the Delhi because the control is not here, control everything is Delhi. So he has to write that company is representing, it has happened by mistake, system has pulled. So it has to be, that way it has happened. Many company directors didn't have reviewed those time which has complied properly. We have done that time. That's why list itself they have removed.
One more clarification, sir. Actually, one of the clients actually he is a director in two companies. In one company, he don't want to revive that. He want to strike it off and let it be. Okay, we can leave it like that. So as you said, STK2 is compulsory in that case to file by going to the NCLT or by going a petition application to the High Court by taking the interim stay, taking it like that. Is it okay? Or we have to compulsory go with the STK2, sir?
Madam, you are completely confusing with the STK2, NCLT and High Court. I told all these three language for different context. STK2 nothing to do with the NCLT. Okay? Revival only can happen with the NCLT. STK2 is that voluntarily that we are filing that I want to strike up the company. That's STK2. That's why I am saying. If suppose you say that no, let it happen by STK2, let the company go. But if you see that as per the MCA scheme, if a director is the director of the company which is struck off, that his DIN cannot be activated again even if you file, because that's one of the disqualification. That's why recently the MCA clarified that if the company has filed with the NCLT for revival of that company, and if that order, even after expiry of the scheme, I am saying, after expiry of the CODS scheme, even if you can able to show an order of the NCLT where the company is revived, we can approach the ministry and say that I have taken an order of NCLT, company is now revived, and I also filed all the documents. Now you have to activate my DIN, they are activating.
So the best thing is to do this. We have to comply with all the.
There is no other alternative except complying the law.
It involves huge expenditure, sir.
No, either comply or that's what even the rest of companies, regional director which I was sending before coming here, I was spending time. They were selling same thing only. What we say is very simple. Comply or you pay. Comply or you pay penalty or pay for consequences, pay. Comply or there is no alternative available. Either comply. If without complying, we cannot come out at all. Okay, that as I told you, that the law is not giving power even to the High Court. Even to the High Court, that you are exempted from filing accounts.
So getting stay and all is not a very.
That's a temporary thing.
Temporary. Okay, fine.
So how much period it is taking for practically to get the final order from NCLT?
From
the date of application.
From
application, making application.
From NCLT you are saying, na? Okay, it takes 3 months time, 2.5 3 months time. If it really should happen, because lot of cases are piled up like anything. Now IBC cases taking their 80% time. Actually speaking, it should not take more than 1.5 months actually, maximum. But it's taking more time because lot of the matters are coming before the NCLT only now. All IBC matters are coming before NCLT, so it is taking lot of time now. That's the reason ministry says that suppose you are taking an NCLT order coming, you approach us, we will do the needful after CODS scheme.
No, he is waiting for so long. Please.
Yeah.
One company is running successfully by two directors. Now they want to liquidate the company because they want to migrate to some country like Canada. For
They
some
want to?
other reason, they want to discontinue the business.
Sorry?
They want to discontinue with the business.
Okay.
What's the option available to them? They can file STK2.
Yeah, provided they should not have done any transaction in preceding 2 years.
No, he is saying that it's a running company.
Running company, yeah?
Yes, yes.
Then you have to come under voluntary liquidation under 59 of IBC. If running company, there's two things. If the company is not functioning or doing any business for last 2 years, we can go by STK2 and strike out the company and the company is right. The company is very much operation, but director does not want to continue. They don't want to continue and discontinue business and close it. They have to resort to section 59 for voluntary liquidation. Voluntary liquidation under IBC, not under Companies Act.
Yeah.
I have a couple of questions. One is my old company having two directors. Two directors are died. I want to go with STK process. How do I process? And my second question is under the disqualification,
See, in these cases, many cases are coming like that, where a director din is blocked, they want to make it good, but din is blocked. How to make it good? Right? Company itself is not there. Like many situations are there. So what they are saying, if the company directors dins are blocked.
No, they say that the director passed it.
Okay, then see, that's a usual situation that can happen in any company. Okay, in which case the shareholder can call meeting and appoint directors to the board.
No, then the shareholders director both are the same. That's it.
This is supposed to be a question in different session, not here. But I answer same thing in a different scenario in the same platform. In fact, in this case, if you see, I used to tell many time forum where I address on partnership, LLP in company. Why people say you form a company, you do that. In case of partnership dies. Unless your deed carries the class that the legal has. Otherwise partnership dies. Sole proprietorship, that's all, gone. Property. So if it is a company, that's the reason I told you that company once the moment it is incorporated, it's different from person is forming it. It's a body corporate on its own. So that can be operated. So it's not with, see, company is not having a life with the person who started this. Okay, company will have life perpetual. So in that case, the shareholder can call, in fact shareholder is not there, right? Then the legal heirs only should step in. And they should step in and they should see that the shares are properly brought and the register members are updated and they become a member and they appoint themselves as a director and they can proceed. Very simple here, when the shareholders are not there in the company, that means shareholder and directors, both are one and the same. This is the inter question in CS and CA. I don't know CA. In CS is the inter question. All the 4 directors who are shareholders flying in the aircraft and aircraft collapses, all 4 died. It's the inter question. I'm saying when the time I written in 95, I answered this question. That time we don't know what to answer. With experience we don't know what to do. Okay. So that's the reason we say you form a company. See, because whether you go on flight or do anything, you are there or not, company will say. Nobody can say that, since director shareholder died and nobody is there, I will take. Or you, in partnership and so you can't go and prove in the court. It is very difficult to prove. It takes life out. But in company it's not the case. You can go to the article of association of the company. If there is a class available, in case of shareholder, this is shareholder, this is director, what is the alternate available? Suppose assuming there is no provision in article, then you have to go by general law, natural justice. If nothing is there in the law, we have to go by principle of natural justice. Saying that the legal has, providing he has got a valid proof that there is a process whereby succession certificate can be taken. There is a process. We can file with the High Court and a succession certificate can be taken for shares. Meaning that in case of share, how legally the shares can be acquired is by taking a succession certificate. There is a separate procedure involved. Suppose I am simply saying that I can simply close by saying, okay, you ask legal heirs to step in and take. Suppose there is a dispute. Who is the legal heir? And there is a property about 50 crores. Okay, and in many cases which I have handled, after everything happened, the second wife son will file, third wife daughter will file, everything happened in CLB itself. In CLB itself it has happened. Cases, not even legal notice. In cases itself, they will implead, saying that no, when he was in Singapore, my mother was his wife. They filed, they impleaded. It has happened. And they got included also in the case. And they were fighting the case also. And there was settlement arrived between first wife, second wife, third wife gets, then they settle the matter out of the court. So, we can't simply say legal heirs can take. There is a process where succession certificate should be taken to get inheritance of the shares. Correct? How for inheriting the property will, we are saying no, same way, but here succession certificate we have to take for shares. By taking succession certificate from the court, you become legally owner. Then after that, you can become a shareholder in the company and you can appoint the directors. It is not that easy. Since I little know about court practice, I know what it is. Yeah. Pardon?
Conclude.
That should be the only solution. There's no other solution.
Okay.
Can we?
Sir.
So in your example of all the shareholders dying by an air crash, see, you have provided for, I mean, that provides for the change of ownership. But what about the management, directors?
That's okay. This new shareholders will have to manage the affairs of
But
the
if they don't elect, if they don't know even that they're shareholders, do they automatically become the directors?
No, not automatically. Yeah, there is also provision is there that if company is not appointing a director, after within 6 months the subscriber will be deemed as a director till that time. And first of all, when you fight to get the shares of the company, okay, and when you want to come shares, when the company is live only, you will be taking initiative to get the shares. When you want the company to be live, the shareholder can appoint the directors, and that need not to be the same shareholder. Director can be different person. In fact, some expert person, I would say, in the market can be deputed as appointed as a director and can be allowed to run the company.
No, but
Still,
suppose it is a worthless company. The registrar alone is interested in getting all the all the balance sheets or striking off.
no, what is
Suppose
your
it's a
actual
worthless
problem?
company.
No, what is your actual problem that you tell me? I will directly tell you. No, that scenario won't arise. What I am saying that when legal has want to acquire the share, there is a process which I explained. Correct? Once they acquire share, they become a shareholder. Once they become a shareholder, it becomes their duty to have a director. Okay. After that, if I don't have a director, why I should have a director? All this question won't arise. Because till the shareholder acquiring the shares alone, there is a confusion. Once through a succession certificate, the legal has acquired the shares, they become shareholder company. They can take any decision to run the company. Appointing director, including appointing director.
Go
Sir,
for the conclusion.
Sir, DIN number is blocked because of non-compliance in some other company. The other company is active and he is signing as director, he is carrying day-to-day operations. Is there any legal consequence on this, sir?
That only I said. Just before I said, if it is a stuck-off company, the person whose DIN is blocked is director of active company, stuck-off company. Correct? But DIN is blocked. Today he is not able to file the active company. He couldn't act as a director in active company. So now those cases has to approach NCLT under section 252, and the director should ensure that company is approaching and filing a petition before NCLT to revive the company. After reviving, then DSC can be activated by making the filing of the active company balance sheets. Okay, and this company balance sheet also can be filed. So only by revival it happens.
That is okay, sir. Now he is signing checks and all on a day-to-day basis for bank operation, etc. Any legal implication? Legally, any problem will come?
Legally, he is not supposed to sign. See, when the DIN is blocked, the legal position is that he is not capable of acting as director. That's why DIN is blocked.
But as an authorized signatory, the normal course order he can sign.
If somebody already would have got appointed as authorized signatory in the company, like finance manager, accounts manager, they can continue. Because companies stay there. Only director alone is not there. Then new shareholder can appoint somebody as director and do. Even that company, they can appoint somebody directors and continue to do that. Parallelly, they have to revive that company. That's the only option.
We'll go for the conclusion, sir. Thank you, sir. CS Dhanapal, sir, and the CA Gopal Raju for effective sharing and practical knowledge and provisions on valuation and the closure of and liquidation of companies and LLPs. As a mark and respect of the SRC, may I request CA Anand Kumar to present a memento to the speaker.
Sir, on behalf of the SIRC, I have pleasure to give this small memento to him.
Thank you, sir. Thank you, members, for attending this seminar. Have a good day, good night. Thank you so much.